ಏರಿಗೆ ಮನವೆಂಬ ಕಟ್ಟೆಯ ಮಾಡಿ ಬಲಿದು ಸೆಳಿದ್ವ ಭಕ್ತಿ ಎಂಬ ಜೋಪಾನದಿಂದ ಪರಮಾನಂದವೆಂಬ ಜಲವ ತುಂಬಿ ಕೆರೆಯ ಕಟ್ಟಬಲ್ಲವರ ನಾರನು ಕಾಣೆ ನಾನು ಕಟ್ಟಿದ ಕೆರೆ ಸ್ಥಿರವಾಯಿತು. ಗುಹೇಶ್ವರ ನಿಮ್ಮಾನೆ. Very good evening, members. Ravindra Kore here, Chairman of Bangalore Branch of SRC of ICAI. Wholeheartedly welcome you all for the today's session on cooperative institutions, challenges and solutions related to income tax. The person really into the cooperative taxation traveled across the state and handling sessions across the country, and especially in the Karnataka Cooperative Act, any taxation matters, the every year at least 1 or 2 sessions in Bangalore and many sessions across the Karnataka state is going to be handled by none other than our respected CA D R Venkatesh sir. On behalf of all the viewers, more than 500 viewers have registered for the today's program, and on behalf of managing committee members of Bangalore branch, I wholeheartedly welcome CA D R Venkatesh sir to this today's session. Welcome you, sir. Dear members, on behalf of Bangalore branch, I wholeheartedly welcome all the viewers who are eagerly waiting to listen the Venkatesh sir today's session. As you know, the Bangalore branch is keep on continually conducting the Jnana Dasoha live webcast sessions. Recently, we had sessions in 7th, 8th, 9th. Today is 14th. So I thought 1 week gap, it is, I feeling for as 1 month gap. So again, coming back for this week's sessions. Today is the 69th session, and tomorrow we are having a 70th session from the organized under the aegis of Committee for Members in Industry and Business, hosted by Bangalore branch, is going to be addressed by chief guest is CA Rajesh Sharma, Central Council member, one of the active Central Council members here, Rajesh Sharma, and speaker is Abdur Rahman Musba Mangalore. And 16th, we are having a very important session again, professional opportunities in government sector. It is going to be handled again with the Public and Government Financial Management Committee of ICI. CA Dheeraj Kumar Kandelwal, again one more Central Council member, is going to address, and CA Ashok Rao is going to address with us. This is 3 sessions for this week, and next week again we are having a session on 21st, 22nd, and 23rd, and this month the last session will be on 28th October. Members, coming to the today's topic, as you are aware, the cooperative in India, only Gujarat, Maharashtra and Karnataka, three states we are in the front runner, and in Karnataka we are having around 30,000 societies, cooperative societies. Especially the last month also we had a session on cooperative. In July also we had a session on cooperatives, and federation personalities also in last session they have addressed, and they have already enlightened. They are represented before Karnataka government that the role of chartered accountants, yes, the other profession members can audit, but they cannot certify the balance sheet, and they are not able to just give justice for the any taxation issues. We are the people, chartered accountants, we are serving for the all cooperative sector in taxation and audit. The today's session, DR Venkatesh sir is, he needs no introduction actually, because he has handled many sessions, and I also fortunate when in KSA had many sessions. We traveled Bagalkot, Belagaum, Dharwad, like that. Our journey started in cooperative. Sir is used to having a session, and we are as an organizer, and any doubts we used to contact always our helping hand Venkatesh sir. Today he is going to enlighten. There are many issues in the cooperative, you know, section 80 and there are case laws, and recently last year I think Savarda and related, whether it is cooperative or not, like that issues are burning issues every day. But the cooperative sector is having their own role in the country. because Gandhi ಹೇಳಿದ್ರು ಗ್ರಾಮಗಳ ಉದ್ಧಾರ ಆದ್ರೆ ಮಾತ್ರ ದೇಶಗಳ ಉದ್ಧಾರ. The whole earlier village days, before banking industry coming into picture, the cooperative only served lot for our rural India. That has to be keep in our mind. And as you know, the November 1st is the last date for the audit of cooperatives. Hope I am having an hope to get extension. We will also from our branch will try to the represent before Karnataka government to get it extension, because it's difficult to get the added to the books of accounts, because again flood is coming in North Karnataka, heavy rain is going on. There are many issues. Yes, again we are living with pandemic. In this situation, will not take much time, because Venkatesh sir is told 2 hours already. His presentation ready and question answers are ready. So definitely it will take more time. So once again, I welcome Venkatesh sir and all the viewers. I request Bangalore branch treasurer Divya to formally introduce the sir to the all the gathering. Over to Divya.
Chairman. To briefly introduce about today's speaker, CA D R Venkatesh sir. He is born in agricultural family of Bomanalli village, Chitradurga Taluk and district in Karnataka. He's commerce graduate from Mysore University and law graduate from Bangalore University. Has done his articleship in MSSV and Co Chartered Accountants Bangalore, and is practicing as chartered accountant from the year 1986. And he joined as partner of MSSV and Co, as well as which was formed in the year 1981 and made a remarkable progress in the field of chartered accountancy. MSSV was a branch statutory audit of Canara Bank and many other banks. And regarding his recognitions, he was president of KCA in the year 1998 and 99, and he was vice chairman of All India Federation of Tax Practitioners, South Zone. He is resource person for programs organized by branches of CA Institute, KCA, FKCC, and many other reputed organizations. He is resource person for management development program conducted by ICA for executives of public sector undertakings. And he is recently Rotary International organized recognized him as a Professional Excellence Award. With this very brief introduction, I welcome you for today's webinar, sir. Over to you.
Anything is left in well there?
Yes, sir, we can start.
Yeah, Venkatesh sir, you can start the session, sir.
Very good, sir. Very good. Very good. Sir, good evening, friends. Good evening to all the viewers of this program. Friends, Bangalore branch has contacted me and I told, sir, you have to talk on these cooperative institutions. Then I told challenges and suggestions. But in the head note given in the brochure, they said challenges and solutions. As you know, in the Income Tax Act, you cannot give a solution, you can give only suggestion. Therefore, you have to modify the topic as challenges and suggestion, not challenges and solutions. Anyway, with this, friends, today I prepared the material, or prepared. I prepared for to give you a lecture on this taxation of cooperative society for 2 hours. And in that, I want to cover the following topic. In introduction, I want to discuss concept and definition of a cooperative sector, what is required. Then 194N, friends, you know 194N, lot of people express that it is not applicable to cooperative society. I want to tell very clearly it is applicable to cooperative society. It is effective from 1st September 2019. Then 206A, this is also a new provision, which is very interesting, where you have to upload some returns for non-deductible tax source. It is also effective from 1st September 2019. Another very interesting topic, tax collection source, 206CH, 1H. Early last year, I think my partner Ram Subramanian already given a lecture of 2 hours on this. I will not take much time. I'll brief you something which you are not attending the last week program. You'll have a benefit of this. Next, 184A, this TDS on interest, whether how much is applicable to cooperative society, when it is applicable, what are the issues connected to 184A, I am going to discuss. Return of income. Friends, kindly note, a lot of cooperative society is not bothered with the due date. They file whenever required. They file last minute. But after 2018 Finance Act 2018, there is a restriction that you want to file the return, you have to file within the due date. There is a restriction under 80AC. If you file after the due date, you are not entitled for any deduction under Chapter 6A. It means you want to claim ATP or you want to claim any ATG deduction, you have to file the return within the due date. That is very important. Method of accounting. In this, I want to elaborately discuss the method of accounting. Lot of cooperative society follow a method which is convenient to them. That is, I call mixed system of accounting. But under Section 145, it is not allowed. As an auditor, when you do audit of a cooperative society or when you do a tax audit or when you file the return of income, you have to advise the cooperative institution that you have to follow Section 145 and also the accounting standards. So many things are there. Income competition disclosure standards, you have to follow. That is our thing. Next is, I want to discuss something I know. Lot of cooperative societies in problem when concluded assessment 17-18, cash deposited by the cooperative societies treated by the income tax department as a cash credit in their books, and what is the implication, what we have to do. That I am going to discuss. I am going to discuss next is restriction on accepting or receiving cash. Lot of cooperatives is not bother. I know when I get appeal papers for filing, then I see lot of cooperatives that violated all the provisions like the 216SST, 216ST, all these things they violated. Therefore, I want to take this an opportunity today to tell all my friends that please advise all the cooperatives where you are involved as a consultant or an auditor, please advise them that these are all the restrictions you have to comply, otherwise you are liable to pay a lot of penalty. And COVID-19, I'll say COVID-19, lot of circulars, notification, press statement given by the Finance Ministry related to COVID-19, extending the due date for filing return, due date for and the reduction in the TDS rate, which I want to discuss. Case laws. Friends, I want to discuss one of the important case laws related to cooperative institution. What our chairman told earlier that whether the cooperative society or not, whether entitled for ATP or not, whether this deposit keeping in a cooperative bank, whether I'm entitled for ATP 2D, all this discussion, case laws I want to cover. Finally, I want to take new form 26AS, which is a very important. I thought I'll share with you so that some of the issues emerging from this new forum should be alert. Friends, I told in the introduction, I have to discuss some of the definitions given under the Income Tax Act or the Karnataka Cooperative Society Act or under Karnataka's Savartha Act, because it's very relevant to what are the issues I'm raising later. This is relevant of definitions. One is under Income Tax Act, 2 subclass 31 defines a person. Person includes individual, HUF, company, firm, EOP, Bank of India, body of individuals, whether incorporated or not. This is the definition of a person. If we see this definition very carefully, cooperative society is not included. Therefore, one of the cooperative society situated in Tamil Nadu take a plea before the court saying that I am not a person coming under the definition of 2 subclass 31, therefore I am not liable for income tax. Then court said that no, this is not the definition, this is included definition. You are coming under EOP. Therefore, when you are filing return of income of a cooperative institution, whether a cooperative bank or a cooperative societies, then you have to say what is the status of the assessee is, you have to say AOP, Association of Persons. This is what important. Next is cooperative society under the income tax is defined as means cooperative society registered under the Cooperative Society Act 1912, that is a central act, or any other law for time being in force in any state for the purpose for the registration of a cooperative society. Once you registered under Central Act as a cooperative society or under the State Act as a registered cooperative society, it is called a cooperative society. They are not given any other definition. It is you should register under the Societies Act, whether Central Act or State Act. Then you call it as a cooperative society. And cooperative society means it is registered and deemed to be registered under the cooperative society. It's called cooperative society. Section 2B1 cooperative bank means cooperative society which is doing business of banking. Friends, you should be very careful. What is the difference between cooperative society and cooperative bank? Cooperative bank means a cooperative. It is a cooperative society, but doing a business of banking as envisaged under Banking Regulation Act, you to do banking business, then you call it as a cooperative bank. Otherwise, any credit cooperative society cannot say I am a cooperative bank because you are not doing a business of banking. You may be only providing credit facility to your members. Therefore, only you continue to be a credit cooperative society. You are not a cooperative bank. This is what I want to take. Here is a very important means person who is joining as an application for registration of a company, cooperative society, or person admitted to the membership after such registration in accordance with the Act, rules, bylaws, and includes, kindly note, nominal as well as associate member. Friends, definition given under the Karnataka Cooperative Society Act, this is not defined in the Income Tax Act, it is defined under the Karnataka Cooperative Society Act. Member means person who joined in the application for registration of a cooperative society, or person admitted to as a member after the registration as per the rules and bylaws, and includes nominal as well as associate member. This is a very important definition which I'll take up when discussing case law. I'll refer to this definition. Under the income tax, under the Karnataka Cooperative Society Act, member means regular as well as nominal as well as associate member. If you take citizen cooperative society, where they said that if you are doing a business with a nominal member and you are doing with a nominal as well as associate member, concept of mutuality is not existing, therefore it is not a cooperative society. I think it is to the extent citizen cooperative with the greatest respect, and I want to tell you, cooperative Karnataka cooperative society differ from the multi-aid cooperative society of Andhra Pradesh. Therefore, at this point you have to keep it in mind. Next is cooperative under CA D R, means a cooperative doing a business of banking registered and deemed to be registered under section 5 of the which word CA D R Sahakari in the name, that is called cooperative. They will not use called cooperative society, they will use the cooperative. In Karnataka cooperative society they cooperative society, in CA D R they called cooperative. And 2G cooperative society means cooperative society registered under the Cooperative Society Act. That is what the word used very clear. If you registered under the Karnataka Cooperative Society Act, then you call it a cooperative society. Cooperative defined under CA D R means a cooperative doing a business of banking or deemed registered under section 5 of the 5, and which is CA D R should be there in the name. That is very important for a CA D R cooperative society. Cooperative. Friends, if you see that, I told you earlier, person definition, society is not included, but as per the case laws of the Chennai High Court, Madras High Court, it says that even the society is, even though is not there in the name, is not there in the person definition, it will be treated as AOP and accordingly at tax. But if we see the rate of tax prescribed under the first schedule, you'll find rate of tax for cooperative society is separate. With the person, it is not included, but the rate of tax on the first schedule to the Finance Act, every year they'll give the rate. That actually, if you see that this is there from 1967, this is the rate. Up to 10,000, 10%. 10,001 to 20,000 is 1,000 plus 20% of excess, 10,000. More than 23,000 plus 30% of the 20,000. This is the rate. And surcharge 12% where the income is more than 1 crore, and education as usual 4%. But with effect from 1st April 2020 for the coming running year, that is where assessment day 21-22 onwards, with effect from 1st April 2020, new section introduced called 115 BAD. That is the tax on a income of a certain resident cooperative societies, where they say you will be availed a 22% consistent rate, provided you have to fulfill all these conditions. Number one is, you should not claim any deduction under Chapter 6A. It means you should not claim ATP, you should not claim ATG. These are all the deductions related to Chapter 6A. You are not entitled to claim. I think no cooperatives will opt for 22% because major income will get an exemption under ATP. They prefer to go for the ATP deduction rather than going for 22%. This 22% is beneficial to cooperative bank. Already cooperative banks are not entitled for the ATP deduction. Now they can opt for 22% and file the return accordingly from assessment date 21 to 22 onwards. Another condition is you should not claim any carry forward losses and will not be allowed to set off. It means you cannot carry forward the earlier year losses and set off against the current year income. It is not permitted as per this requirement. And a very important return to be filed on or before the due date under 139. Once you exercise this option, you have to continue for the subsequent year. Once the option has been exercised for any previous year, it cannot be subsequently withdrawn for the same or any other previous year. Once you opt, that will continue. And you have to fulfill the condition, then you are eligible to go for this constitutional rate of tax of 22%. I told you 194N, payment of certain amounts in cash. Friends, this is a very worrying factor that effect from 1st September 2019, Finance Act introduced this one very important restrictive provision. It says that any bank or a cooperative bank or a post office, when giving the recipient person deductee, called deductee, or the person who want to borrow, or person who want to draw cash from the bank or from cooperative bank or a post office, when you draw cash more than 1 crore in a financial year, 1 crore not at a time, 1 crore any time during the previous year, starting from 1st September 2019, then if you draw more than 1 crore, you are liable to deduct tax source at 2% from that payment. 2% from that payment. It is applicable only to payer a sum of aggregate rupees cash in excess of 1 crore. If it is up to 1 crore is an exemption, more than 1 crore, you are liable to deduct TDS at the 2%. This section is not applicable to payee is a government, bank or a cooperative bank, post office, ATM operator, any other person may be notified by RBI. In the sense, this section is not applicable if a payee is a government. If a government want to draw cash to the bank or a cooperative bank or a post office, it will not be subject to TDS under this provision 184N. Or a cooperative bank to draw from the another cooperative bank or from the nationalized bank any amount they want to draw, let them draw, no restriction. 194N is not applicable. Post office, ATM operators, all other institutions which are coming under the are they notified in the subsequent circular. It very clearly says that which are the institutions exempt from application of 194N. After when they before coming to picture, there is a press release by the CBDT and also Finance Ministry. They said this is applicable from 1st September 2019. As per this, threshold limit is 1 crore per year. Therefore, what are the withdrawal done by the any person from 1st of September 2019 up to 31st of 2019, consider the purpose of only threshold limit determination and will not be taxed. Take for example, one person is drawn already more than 1 crore. Suppose they drawn 1.5 crores. Only what are they withdrawing from 1st September 2019? Any amount, then you have to deduct 2%. But if he has drawn 90 lakhs in the up to September 2019, if you draw 15 lakhs in the month of September 2019, then up to 10 lakhs is exempted because 90 plus 10, 1 is exempted. On 5 lakhs, you have to deduct TDS at the rate 2%. This is the provision. It is effective from 1st September 2019. There are notification dated 18 September 2019, notification number 68, 70, 80. All these notifications related to notify institutions like exchange operators or the ATM operators or the APMC agent. Very important is APMC agent. That is a 68 circular, which is very clearly says that any trader or APMC agent operating in a APMC yard and got an APMC license to do the business, you will not be subject to TDS under 184N. This is a very great relief to the APMC agents who are working in a APMC yard and are a trader who is working in a APMC yard. You want to draw cash, which you want to make a disbursement to all the agriculturists. That therefore they give an exemption that you are not required to deduct tax under 194N if the agent is drawing a cash or a trader in a APMC yard. For this purpose, the banker has to collect the proof that he is an agent of in a APMC yard or a trading, he obtained a license or trading license in the APMC committee, then you will be exempt from this 194. The bank has to collect these details, ensure that he is coming under the exemption provisions, then we give an exemption to this. He should be APMC agent or he should be a trader in a and obtained the APMC license under the APMC Act. Next is 194N. What I discussed so far is the provision up to 30th June 2020. From 1st July 2020, there is an amendment in the Finance Act 2020. They said that old provisions will continue provided you are a regular tax filer. You are filing your return regularly and you are not defaulted any filing of returns for the latest 3 years. You are filing regularly. Your threshold limit is 1 crore, 2% is the rate of TDS. It will continue. But in case if you are not filed, the recipient who is going to draw the amount from the bank and he has not filed the return for the latest 3 years, immediately preceding previous year, then The threshold limit for the withdrawal is 20 lakhs. For any 1 year he has not filed, then 20 lakhs is the threshold limit. From 20 lakhs to 1 crore is 2%. More than 1 crore withdrawn during the previous year is 5%. This is a provision for non-filer of return of income effective from 1st July. If you are regularly filing return of income, old provision will continue. Your threshold limit is 1 crore, rate of deduct TDS is only 2%. But if you are a non-filer for any one of the years, any reasons, we don't know what are the reasons, but we are not interested. Banker as a banker, collect the 3 years returns and 3 years return is filed, no problem. In a delay in filing, no problem at a time. 1st July 2020, if we give the latest 3 years, 2009, 2018, 2017, these are latest year because due date is not over. Therefore, up to 2019, you give the assignment for the filing return of income. For that SSC, then you can give the higher threshold limit and rate of TDS is 2%. In case of you are not giving the details, you are not a regular filer, you are defaulted in any one of the years, then is the threshold limit is up to 20 lakhs, no TDS. 20 to 1 crore is the 2%, more than 1 crore is 5%. This is the difference between effective from 1st July 2020. Friends, this provision is also applicable to cooperative society. I know a lot of friends who are listening may ask later or may put it in a question box saying that, sir, cooperative society also is like a bank. Therefore, they are given an exemption to bank. Therefore, cooperative is also entitled for exemption. Sorry, Credit Cooperative Society or a housing cooperative society is not a bank. Cooperative bank means a bank who obtained a license under Reserve Bank of India regulations. RBI Act is applicable, BR Act is applicable. Therefore, you are not a bank. Therefore, you are a cooperative society, whether a credit cooperative society or a housing cooperative society or any other cooperative federations are not entitled for this exemption. When you draw amount from the bank, whether a cooperative bank or a nationalized bank, you are liable for 194 reduction. 194 reduction of 2% or 5% depends upon your situation. This is what I want to share with you. Now the question arises, maybe you raise a question, sir, as per this proviso, they say you have to file for the latest 3 years. Suppose I started the business only last 1 year back, what I should do? I don't have a 3 years balance sheet, 3 years returns to file, only 1 year. If you have filed 1 year, you prove that you have started only 1 year back, I think still you hold good this exemption clause, you are still entitled for the exemption and you are not missed to pay higher rate. You have to 1 crore is threshold limit exempted and you are entitled to they are going to deduct only 2%. You have to prove before the banker saying that when you have started, which is a newly incorporated cooperative society or a newly incorporated person, then this is the provision. Otherwise, you are existing for more than 5-6 years, but you are not filed the return, you are liable for this new provision of threshold limit 20 lakhs, 20 to 1 crore 2%, more than 1 crore 5%. This is the issue which I wanted to share with you. This is what in 194N, the new provision, the effective form. They issued one more circular on 28th July 2020. Circular number 14 for 2020. It is very clear. Whatever the circular issued earlier, I told you earlier circular 68, 70 and 71. These are circular issued when the September 2019 provisions, when the provision of 194N up to 1 crore threshold limit 2%. That time they introduced saying that ATM is not APMC agents and the traders are not liable for TDS. And the ATM operators, money exchangers, all these things are not required to deduct TDS. That circular will continue. That's what the circular number 14 by 2020 says. Whatever circular issued under the old provisions will continue in the new provisions also. Therefore, fulfill the conditions specified under the old 3 circulars are entailed for the benefit of this 194 exemption. This is what the circular issued with respect to this. Friends, now 206A is a new provision. It is there from earlier, but introduced in the Finance Act 2019, effective from 1st from 2019. Read the head note of this section. It says, statement for payment of any income to a resident without TDS. Friends, you have made the payment to a person. You are not deducted TDS because maybe less than the threshold limit of 40 or 50, 40 in case of normal and 50 in case of senior citizen, you are not deducted. or a person is given a 15G, 15H, you are not deducted. But in case of a SB account, you will not deduct TDS because there is a very clear under 184 only on a interest on a term deposit or a time deposit liable for TDS. In case of a SB interest, you will not deduct TDS because it is a term, not a term deposit, or it is not a time deposit. That situation, they know the provision says 1st September 2019 onwards, you have to upload the return, quarterly return, every quarter, on a specific date is there, I will discuss later. You have to upload return under 206A. That return is 26QA. It should be given by all branches of your bank or a cooperative society. You have to give all the branches, they have to submit the details. Then the head office has to consolidate all the branches information and submit the quarterly return to the government or the department. That is called 26QA. QAA. First branch wise is QA. This one wise 26QAA. This is return consolidated by the head office and forward to the department on quarterly basis. This is for non-deduction. For the deduction of tax source, you know, you file quarterly return 26Q. You upload every quarter 26Q. But if you are not deducting tax source for any reason may be less than threshold limit or 15G, 15H or SB interest, there is a thing saying that you are liable to deduct tax, liable to file this quarterly return for non-deducting tax source within the provisions of 194. Therefore, this is applicable to banking company. Kindly note it is applicable to banking company, nationalized bank, or the cooperative bank, or the scheduled bank or not scheduled bank, or cooperative society. Kindly note today we are all interested in discussing about the cooperative society. Therefore, cooperative society also has to deduct, also file this return. You are not deducting tax source because 194A says subclass 5, subclass 3 says that you are not required to deduct tax source if you are paying interest to members. You are not required to deduct tax source any amount. That case also you have to upload this information. Therefore, friends, kindly note, especially cooperative society, which are giving interest to members, any amount, if you are deducting tax source, not required. Other than that, for whom you have paid interest more than 40,000, then you have to disclose in this return and file on a quarterly basis. You have two sets. One is you are deducting, not required. You file only 26Q. If you are not deducting because of any reasons, file 26QAA. That return you have to file. This is applicable to cooperative society. Friends, today I have taken specifically to mention all cooperative societies. Please upload this information. It is effective from 1st September 2019. If you are not uploaded, kindly upload now. Separate the defaults. Otherwise, you will going to be in problem and you have to pay 100 rupees per day of default. There is a quarterly when you have to file, I will tell. So many procedures which I am not going to discuss. This board has a power to give how to format and other things, forum, and you can rectify anytime you want. Any error is there in this. And rules are 31 AC, ACA, 37 BC. Forums I told you 26QA and 26QAA. 26QA is to be branches and 26QA is head office. See, this is very important where in case of banks, they have an independent TAN number branch wise, then they have to upload 26QA, give it to the head office, not to upload, you have to give it to the head office. Head office consolidate all the forms 26QAA and file the quarterly return before the authorities. But this is applicable to cooperative society also. Kindly note, cooperative society having a branches and also they have to consolidate like 26QA branches and 26QAA for the head office. This has to be done very, very strict. These are the very nice provisions. Okay, every month you have to compare this information and upload on a quarterly basis. This is what the requirement. You have to maintain 26K particulars are maintained for the financial quarterly return and 26QAA is the quarterly return. I told you already this is as done in the earlier other return. You have to file first quarter before 31st July, second quarter by 31st October, fourth quarter by January, third quarter by January, fourth quarter by June. This is you have to follow from 1st September. It means December 2019 first return in the financial year 1920, second return by 31st March. That is why you have to do by June, 30th June. Now in the current already, first quarter June, you should have filed by July, and September by 31st October, you have to file. If you are not filed, I'll advise to all of you, please file immediately, give reasonable cause, then they can levy a penalty may be waived. The penalty will not be initiated. Please file voluntarily, don't keep pending. This is a very elaborate job. Maybe some co-producers will say, what is this, sir? I have to do all this work, uploading of quarterly return, uploading of non-deduction of tax source. Why you have to upload? Only thing is, friends, these are all department want. All tracking of the transaction of income, which is received by the recipient, he has to pay to the, include in his return and file the return card. But if you are not uploaded or you are not disclosed in this, then the recipient may not disclose. That's why they want to say all the things. Over receives the interest, file the return and pay whatever the taxes to the government, required to pay to the government. (206(1)(h). This is also provision introduced through a Finance Act 2020. It is effective from 1st October 2020. This is only 14 days old provisions. Friends, it is applicable to a person whose turnover is more than 10 crores in the previous year. That is, for the year ending 31st March 2020, his turnover is more than 10 crores. This provision is applicable. What you have to do is, every person being a seller who receives any amount as a consideration for sale of goods for a value or aggregate such value exceeding 50 lakh rupees in a previous year shall collect tax from the buyer at the rate of 0.1% of a sale consideration exceeding 50 lakh. Kindly note, this is very clear. It says that when a seller receives the consideration for sale of goods, it means only for sale of goods this provision is applicable. For a sale of service is not attracted. Goods means you have to see what are the goods definition. What are the goods is that is attracted. That includes even shares, securities also is a goods for the purpose of this section. They said that it is also applicable to sale of securities and shares. But if you are dealing through a recognized stock exchange, it is exempt from TCS provision. In this case, friends, seller who receives the amount consideration for sale of goods for exceeding 50 lakhs, then you have to collect 0.1% and pay to the remit to the government. This is the requirement. But some of the restrictions are exempted. That is, when you goods are specified under section 1F and 1G of section 206, it is already you are collecting TCS under other provisions of this 206C, then you are not necessary to collect under 206C 1H. Transaction covered by TDS provisions. Any TDS provision under Chapter 70B is already covered for this transaction. That transaction will not be subject to TCS under this provision. Export sales, very clear, no TCS. Then either buyer is a central government or state government or embassy, high commission, consulate or trade representative of the foreign state or local authority, any other entities noted by central government, it is exempt from TCS under 206C 1H. Now the issues before you is whether seller collect the tax on receipt of from 1/4/2020 to 30th September. Very clear. Whatever amount you collected up to September 2020, maybe 10 crores, no TCS. No TCS. Whatever you collected before September 2020, no problem. Collect. You should collect consideration received to your account. There will not be any TCS up to September 2020. Whatever you collect after 1st October 2020, then you have to collect TCS if it is a collection is more than 50 lakhs in a financial year. For the purpose of threshold limit of the 50 lakh, you have to see what is already collected from 1st April 2020 to 30th September 2020. If you already collected 40 lakhs, now in the month of October you are collecting another 50 lakhs, then 10 lakhs is exempted, another 40 lakhs you have to pay. You have to collect TCS at 0.1% and remit to the government. For the COVID reasons I told you earlier, you have to collect 70% of 0.1%. That comes to 0.075% you have to collect and remit to the government. And this threshold of 50 lakhs, whether it starts from 1st April 2020 or 1st October, I told you earlier, threshold limit it starts from the 1st of April up to 31st March 2020. If your likely sales or likely consideration is going to be more than 50 lakhs in this financial year, Generally, you have to collect if it is less than 50 lakhs, no TCS at all, no collection of tax at source. This is the simple project. Friends, last week already we had a lengthy discussion, more than 2 hours on this TCS. I will not take much time. I will end by this TCS provision. There is a circular issued in the connection to 206H, CH. In that they said that how to do for the earlier, what are the other issues connected to that. I want to take 2-3 issues mentioned in the circular. They say you are collected on 1st April 2020, 1st October 2020. It means that whatever the bill rise in the earlier year or earlier period, take for example, you raise the bill in April 2020 up to September 2020, but you are collected after 1st October 2020, TCS is applicable. Collection is very important. Or you are raised the bill in the earlier year. Anytime before September 2020, TCS is attracted if you collect the amount after 1st October 2020. Therefore, for calculation limit of 50 lakhs, you have to calculate what you have collected from April 2020 to 30th September 2020. And if you are already collected more than 50 lakhs, what you collect now, you have to pay, you have to collect TCS and remit to the government. There is one provision. If any sales related to earlier period, but you are receiving the amount after 1st October 2020, still you have to pay TCS on the amount even though you related to earlier period. One you says no, up to 31st March 2020, whatever sales affected for which you receive now, you are not necessarily pay TCS, but I will not agree with you because section says that any consideration received for sale of any goods after 1st October 2020, if it is exceed 50 lakhs, 50 lakhs is what you collected in April to September, only for the limited purpose. After that, any amount related to any period. That's what circular 17 says that any invoices raised before 30th September 2020 and your collected amount later, TCS is attracted. How to collect TCS? Now you have raised the invoice earlier year, you are not aware TCS collection. You have already raised the invoice only for the, now you have to, what you have to do, you have to raise a separate debit note on these parties and collect under. Suppose you have collected the amount but you have not collected TCS, in my opinion, you have to remit the TCS to the government because you have collected the consideration. What are the consideration? The TCS applicable on this consideration, you have to remit to the government. Whether you are going to collect from the party or not, they're different. You have to pay this to the government. This is what the government intention. Therefore, you have to raise a debit note to the party, collect it, possible, and remit to the government. Friends, all the due date for remittance, all these things, what applicable to TDS, Chapter 17B TDS provisions is applicable. You have to remit on the same line, same time frame, same challan. Only challan, this one you have to mention TC. This is the requirement of the thing. And you see now is whether TCS 0.1% or 0.075%, you have to collect on the GST, including GST or excluding GST. If you read the circular, it says that you have to give the invoice in which you have to add the TCS as the collection. You have to show. It means that you have to raise the invoice, cost of the goods, plus freight, insurance, anything connected, plus GST, plus IGST, what are the CGST, IGST, SGST, add. You arrive on figure. On that, you have to say TCS of 0.075% on the above amount. You have to show as a separate line item and collect from the party and remit it. Then there may be a question now, sir, I raised a bill invoice. I received only advance of, I received only 10 lakhs. Out of 50 lakhs invoice, I received only 10 lakhs. Then you receive only 10 lakhs. If you already received from this party is more than 50 lakhs in the earlier period, up to September 2020, then on 10 lakhs, what is the proportionate 1.075% you have to remit to the government. Based on the collection, you have to remit to the government. That is the requirement of the thing you have to collect. Suppose you received any advance, against the future sales. When you receive the advance against the future sales, you have to remit the TCS when you receive the advance. On the advance amount, what are the applicable rate? 0.1% or 0.075%. 0.1% from 1st April 2021 up to 31st March 2021, you have to raise 0.075% that you have to remit to the government. When you receive the advance or when you receive the amount, raising a debit note, you have to raise. This is what they clarified in the circular 17/2020 dated 29 September 2020. Friends, I'll come to the old provisions under 194A. Threshold limit for senior citizen increased in the Finance Act 2018, effective from 1st to April 2018, 40,000. Sorry, 50,000. Senior citizen, 50,000. Who is a senior citizen? Whether a male or a female. Senior citizen means individual resident in India who is his age of 60 years or more, anytime during the previous year. Yeah, from 1st April to March, anytime during the year you are celebrating your 60th birthday, you are eligible to this threshold limit of 50,000. This is the provision for senior citizen, 60 years and above, anytime during the previous year. In the Finance Act 2019, threshold limit for a normal earlier was 10,000, now is increased to 40,000. Now is 40 and 50. 40 is for normal, 50 is for specified senior citizens, 50,000. Then senior citizen continue to 50,000, no change. Then the new provision which I want to share with you, it is effective from 1st April 2020. Friends, kindly note, all cooperative societies earlier up to 31st March 2020 exempt from TDS under 194A, subclass 3, subclass 5. It says any cooperative society paying interest to members, its members, or to another cooperative society is not required to deduct tax source, up to 31st March 2020. This is the provision. Now, from 1st April 2020, they said that as a deductor, you are a cooperative society, as a deductor, kindly note you as a deductor, you are a cooperative society. Your turnover for the year ending 31st March 2020 is more than 50 crores, exceeding 50 crores. Then, if you pay interest to members, then also you have to deduct tax source. That is the requirement of the law now. When you are paying interest to your members, when you are paying interest to members, you have to deduct tax source. Earlier, members were exempted. Now you have to deduct tax source on the members' deposits. It means up to 40,000, no TDS. If it is more than 40,000, you have to deduct TDS at the 10%. In the case of citizen, more than senior citizen. In case of senior citizen, is more than 50,000. This is the provision in respect of the thing. This is what the turnover 50 crores. Only in case of a cooperative whose turnover is more than 50 crores for the year ending 31st March 2020, then 1st April 2020 onwards, this cooperative society as a deductor, deduct TDS on the interest paid to members. If he exceeds 40 or 50, deduct at 10%. Now you have to deduct at 7.5%. This is a requirement of the new provision from 1st April 2020. Therefore, friends, cooperatives should not sleep saying that interest paid to member, it is exempted as envisaged in the earlier up to 31st March 2020. Now it is not. But now his turnover should be more than 50 crores. What is the turnover? What is the turnover of 50 crores? What is the turnover? Whether includes loan given and loan taken, loan given, especially loan given, repayment of loan, are to be considered, or only the profit and loss account. What is the interest credited to the profit and loss account? Safe lockers collected, any other charges collected by the cooperative society from its member, shown in the credit side of the profit and loss account, is shown as a credit. That is a turnover. I think this question is not answered. This question is not there in the. You have to wait and see. But my view is turnover for the purpose of this section should be turnover as envisaged under section 44AB. That is 44AB says always what is taken to profit and loss account as a credit side of your profit and loss account. That is the receipt, interest receipt or the miscellaneous receipt, locker rent, all these things take. Suppose your credit supposed to be dealing in products or trading in product, then whatever the sale of product is there, that also you include. If it is more than 50 crores, then you are liable to deduct TDS from 1st April 2020. This is a new provision, friends. Kindly note, it is very important. All of you have to keep it in mind for all this and advise your clients accordingly. Next is, friends, I am taking 194A very elaborately because the cooperative societies are, you have to be very careful about the 194A. You know, threshold limit for 194A is 40,000 if it is a banking company, 40,000 a cooperative bank, and 40,000 for a post office. But any other party, like a company, any other company, or a cooperative society, when you are paying interest to members, whether 5,000 or 40,000 or 50,000. This is a question. See, earlier I told very clearly here, take forward. I said very clearly, in this case, if it is a tax, you have to deduct on the interest paid to member if it is more than 40,000 and 50,000. That is my view. This slide is my view. But friends, if you go to this slide, they say very clearly threshold limit of 40,000 only payer is a banking company, or a cooperative society engaged in the business of banking, that is up to 40,000. Post office 40,000. If 5,000 in any other case, in this case, I want to tell you whether a credit cooperative society, it is not falls on any first three category, because it is not a cooperative bank, it is not a bank, NVC in the BR Act, or it is a post office. Therefore, in case of a cooperative society, we are paying interest to members more than 50,000, more than 5,000, whether you have to deduct TDS at the rate of 10%. From 1st April 2020, if it is a turnover is more than 50 crores in the earlier previous year. That is the provision. Friends, kindly be careful about this provision. I want to see whether the 50 or 40,000 given is effective for the cooperative society. I'll check and do it. Please wait. Friends, very happy to say that here they are given in the provision when they said the total receipt or sales of a cooperative exceeds 50 crores, you have to deduct taxes source. Then they say, for the purpose of this, interest or aggregate of such interest credited or paid or like to be credited or paid during the financial year is more than 50,000 for senior citizen and more than 40,000 for other cases, then also this TDS is not attracted. In this case, any other case that you have to know, elaborate. In case of cooperative society, coming under 184A, up to 40,000 in case of a normal person, don't deduct tax source. If it is more than 50,000, in case of senior citizen, not deduct tax source. This is the provision I want to say, distinguished now, very clear. You have to deduct TDS at the rate of 10%. Now is 7.5% up to 30% of 2021. Next is example. Here a cooperative bank paying interest to the other cooperative society. Whether you have to deduct tax or not. I told you, cooperative bank, when you pay interest to cooperative society, earlier our impression, our argument was, cooperative bank is a cooperative society. Therefore, whatever the exemption given under the 194A, subclass 3, subclass 5 is applicable to cooperative bank. Therefore, when a cooperative bank paying interest to members or to other cooperative society, TDS is not attracted. But in the Finance Act 2015, with effect from 1st June 2015, they amended this clause where they said that cooperative bank, when you paying interest to its members, you have to deduct tax source. This exemption is not available to cooperative bank. That was 1st June 2015. In the same explanation, when they clarifying the on 194A amendment, the CBDT has issued a circular on 27 November 2015 in para 47.7. In para, there is a big circular of 87 pages. In the para 47.7, they clarified saying that when a cooperative bank paying interest to cooperative societies, whether it is a credit cooperative society or housing cooperative, any other cooperative societies, cooperative bank paying interest to another cooperative society, no TD to be deducted irrespective of the interest paid. This is the memorandum when the clarification given by CBDT in November 2015. I feel that this provision is, this clarification given is what's spread today also. Therefore, cooperative bank paying interest to cooperative society, any amount, no TDS. Any amount, no TDS. This is what I wanted to share with you. Next is 194A. I already told you threshold limit earlier 40, now earlier 30 is now increased to 40 and 50. Earlier threshold limit is calculated branch wise. From 1st June to the 15 onward, it should be calculated on a bank as a whole. Take for example, I'm keeping FDs in 3-4 branches of a Canara Bank. For the purpose of threshold limit of 40 or 50, you have to consider all the branches interest together, term deposit interest all together. If it is more than 40 or more than 50, you have to deduct tax source under this provision. This is what threshold limit to be calculation on the bank as a whole, not as a branch. In case of a cooperative society having various branches in the Karnataka, take for example, a cooperative society having a lot of branches, whether this provision is applicable. Friends, kindly note if your cooperative society is on a core banking solution, then it is attracted. Otherwise, it is applicable only to a bank which is having a core banking solution. Otherwise, it's not applicable to a cooperative society which is not having a core banking solution as their platform. Next is earlier, RD was not a term deposit as explained in the 194A. They amended saying that RD also is time deposit. It is a term deposit from 1st June 2015. This is what now you have to calculate all the term deposits. That is all the fixed deposits plus RD. All together, if it is more than the threshold limit, you have to deduct taxes source. And in case only now exemption is a savings bank account is not liable for TDS. Savings bank account is not liable for TDS, not for exemption, income tax exemption. Lot of people, whenever I go for the any lecture, lot of people has asked question, sir, there is an exemption. To exemption only for non-deduction of TDS. You are not necessarily go to TDS at all. But income tax is concerned, you have to include the SP interest. Whatever the tax is there, you got to remit to the government. Only TDS is not there. That kindly note, this is what the difference. Now I want to test you whether 194A will attract. I put some lot of yes and no question mark. Plus cooperative bank paying any interest to member from 1st June 2015, any amount more than threshold limit, you have to deduct taxes source. Yes, applicable. Next, cooperative society up to 31st March 2020, paying interest to any member or any other cooperative society, exempted, no TDS. But if from 1st April 2020, this cooperative society as a deductor, his turnover is more than 50 crores in immediate preceding previous year, interest paid to the member. If it is more than threshold limit of 40 or 50, you have to deduct taxes source. Cooperative society paying interest to another cooperative, the exemption continues. You are not necessary to deduct taxes source. Next, cooperative bank paying interest to cooperative society. I explained earlier, cooperative bank is not required to deduct TDS paid to the other cooperative society as per the clarification given on the circular dated 27 November 2015 in para 47.7 very clearly said that when a cooperative bank paying interest to cooperative society, you are not required to deduct taxes source under 194A. Then cooperative bank paying interest to another cooperative bank, whether TDS is to be required or not. I put a question mark here. Whether cooperative bank paying to another cooperative bank, whether deduct TDS or not. My answer is yes, you have to deduct or not to deduct tax source. My answer is no. When a cooperative bank paying to another cooperative bank, and a recipient cooperative bank is covered by the Banking Regulation Act, PR Act, Banking Regulation Act, that cooperative bank receipt bank is the covered by Banking Regulation Act. Under 194A, subclass 3, it is exempt from TDS provisions. Similarly, next, cooperative bank paying to another cooperative bank, cooperative society paying to cooperative bank, it is not required as said in 194A, subclass 3, cooperative bank is covered by the Banking Regulation Act, recipient bank is covered by the Banking Regulation Act, TDS provisions are not applicable. Similarly, nationalized bank paying to cooperative society next. Nationalized bank paying to cooperative society, whether TDS to be done or not. I told you when a cooperative bank paying interest to cooperative societies, there is no TDS because as explained in the circular, I mentioned November 2015 circular. But when a nationalized bank paying to cooperative society, there is no clarification, there is no, strictly speaking, they have to deduct tax source. When a nationalized bank paying to cooperative society, they have to deduct. The clarification given on November 2015 only on a cooperative bank, not on nationalized bank. Therefore, in my opinion, you have to deduct tax source when a nationalized bank paying to cooperative society. When a nationalized bank paying to cooperative bank or vice versa, it is not liable for TDS because received bank is covered by the Banking Regulation Act. Now we'll come to some of the issues which I want to share with you. A member of a cooperative society, of a credit cooperative society, this member is subject to tax audit under particular. It means for turnover for the year ending 31st March 2020 is more than 1 crore, is liable for TDS under particular AB. And he has borrowed fund from the credit cooperative society of 25 lakhs, for which you want to pay 2.5 lakhs. He'll come to you and ask that, sir, this is the transaction, whether to deduct taxes or not, whether TDS is required under section 184A. I told you earlier, when a credit cooperative society paying interest to other members, to its members, is not required to deduct tax source if the turnover of that cooperative is less than 50 crores from 1st April 2020. That is what the new provision. Up to 31st March 2020, not required because any interest paid to member by a credit cooperative society or any cooperative society is not required because exempt under 194A, subclass 3, subclass 5. But in this case, reverse. Member is paying to cooperative society. Therefore, there is no exemption under 194A. My opinion is this member has to deduct TDS under 194A, remit to the government. Friends, this is the slide as shared with some of the earlier branches of SARC. Lot of question came that sir, earlier year I have not deducted. I am not. I am gone paying without TDS. What to do now? Now we have to take 26A from the Credit Code Society. You have to take 26A. For 26A, you know that you have to set it by a chart account of the Cooperative Society and see that this income is already included, already suffered. Therefore, you are not required to pay TDS again. But you are liable for interest. You are liable for other consequences other than the tax, other than the TDS. This is what the new this thing. Then, friends, I want to share with you regarding tax audit. All of you know tax audit is required only when your turnover is more than 1 crore. This is applicable to cooperative society. Lot of cooperative says that statute is over. But who has to do the tax audit? Tax audit, friends, you know, this should be done only by chart accountant. Cooperative statute audit can be done by any person other than chart accountant. Who is eligible under the Karnataka Cooperative Society Act. Maybe department officials also can do the audit, statute audit. But tax audit to be done only by chart accountant. This is a privilege of chart accountants only. Have to do once the turnover is more than 1 crore. More than 1 crore tax audit compulsory for cooperative society. Friends, I am not going to discuss other like individuals up to 2 crores, presumed under presumed income declaration will not require tax. I will not take because today's topic is cooperative society. Therefore, up to 31st March 2020, your turnover is more than 1 crore. You have to deduct. You have to do the audit under section 44A by a chart accountant along with statutory report, along with the tax audit report and the particular form 3CB and 3CD, you have to upload to the income tax department. This is the requirement. Now, from 1st April 2020, 1st April 2020, from assessment 21-22 onwards, there is a new provision under section 44B. It says carrying on a business shall, if it is a total sales or turnover or a gross as the case may be, in a business exceeds 1 crore rupees in the previous year and exceeds 1 crore, your business exceeds 1 crore, but your aggregate receipts, what are they from turnover or a gross asset in the previous year, CAD does not exceed 5%. It means you have a turnover, your gross asset or a turnover in your profit loss account is there. In that, whatever that receipt includes, any cash receipt should not exceed 5%. It should be less than 5% of the total turnover. Then you are not liable for tax audit, subject to another one condition. That is, another thing is also expenses made during the year. Payment made during the year is payment made during incurred for the purpose of expenditure in cash should not exceed 5% of the total payment, total expenditure. Means you have an expenditure of 100 lakhs, all expenditure together, your cash payment should not exceed 5 lakhs. That is the requirement. It should be less than 5%. Then for purpose, instead of 1 crore, you can go up to 5 crores. No tax credit up to 5 crores, provided you fulfill these two conditions. One is your cash receipt should not exceed 5% of the total receipt and your expenditure should not exceed 5%. Here they say word amount received, including amount received toward turnover, gross receipt during the previous year does not exceed 5%. What is the meaning of receipt? We have a lot of questions on this. I think Guru Raj Acharya last week he discussed about this point, whether gross assets includes even the capital receipt. Loan taken is a receipt, whether can be included. Or expenditure means only the payment, whether repayment of loan is given in cash, whether to consider as a thing. Therefore, I am restricting my view on this, but my view is very clear, friends. Only the what you are debited to profit loss account or credited to profit loss account, turnover or gross asset credited to profit loss account or debited profit should be less than 5%. Your entity, not the other loan receipt or a grant receipt or a capital receipt or any capital introduced by cash will not be subject to this calculation of percent. This is my view, kindly subject to approval from the other experts. Friends, now return of income filing. All of you know as on today, due date for filing 31st March 2020 return is 30th November. But you have to upload your tax audit return before 31st October 2020 as last stands today. We don't know, there may be extended, but this is the due date. But this is the new provision, this is there for last 2 years. 80 AC, it says deduction not to be allowed unless return is furnished within the due date allowed under 139(1). This is applicable 1st April 2018. This is for all the cooperative. While in computing the total income of assessee for any relevant previous year related to this period 2006 to 2018, from 1st April 2018, any deduction inadmissible under the provisions of chapter under the head deduction in respect of certain income. Definitely your income under ATP is a deduction in respect of income. Therefore, cooperative society which want to claim ATP deduction, please file the return before the due date. Your return should be filed before the due date. Under 80 AC, you are barred. If you are filed the return after the due date, you are not entitled for any deduction under Chapter 6A. That is related to certain incomes. You are not entitled. Therefore, file on or before the due date. Therefore, your due date is 30th November. Please file before 30th November. Upload the tax audit report with the tax audit report is applicable before 31st October 2020. This is the due date. I thought it fit. This is I have to tell all my friends, professional friends who are listening this to know that these are the due dates coming very fast. Please gear up for this time schedule. Friends, next is method of accounting. This is a very interesting because all cooperative society, especially cooperative bank, they say that method of accounting 145 is not applicable to cooperative societies. Lot of cooperatives say that, sir, as per the Cooperative Society Act, so and so rules, so and so section, I'll refer the sections later. They say that method of accounting, the account receipts on receipt basis, all income you recognize on receipt basis, expenditure on accrual basis. It is a mixed system they want to follow. Friends, is not permissible. From 1st April 2011 onward, they have to follow all the income chargeable under the head business and profession, profits or gains of business and profession, or income of other sources. They have to follow consistently and regularly cash basis accounting or mercantile system accounting. Fixed is not permitted. But our cooperative societies or a cooperative bank follows always fixed. It is not permitted. But earlier to 2007, nobody was asking. They are gone filing whatever method they want, or not filing also. But now it is not so. Therefore, they have to file the return now, follow section 145, mercantile basis of accounting for receipt as well as expenditure, or cash basis is permissible, or cash basis as well as expenditure. Fixed is not permissible. And also somebody asked in the earlier forum, sir, whether what are the international, this accounting standard, income ICDS, whether applicable to cooperative society, definitely is applicable for all the FSC. Central government has notified that all the 10 accounting ICDS, income competition and disclosure standard is applicable. All the auditors who do audit, tax audit under this 44AB, you have to follow this ICDS, all 10 accounting standard, whether followed or not followed, or what extent deviation you have to report in your report, therefore it is compulsory. Friends, now I told you very clearly, method of accounting should be mercantile or should be on the cash basis, not fixed is not permissible. But under the Karnataka Cooperative Act, I know section 59 read with rule 22 of the Karnataka Cooperative Society Act, it says that rule 22 on read with section 59, it says, sorry, 57, section 57 and rule 22, it says that whenever a cooperatives want to declare dividend, they have to provide for a minimum things. One is unrealized rent is there, you should not declare dividend, you have to reduce one. Suppose your interest is 100 lakhs, you have provided accrued interest of 20 lakhs, and now you are having a 80 lakhs received, 20 lakhs not received. If you want to declare a dividend, then what you do, 100 is the income recognized, you reduce 20, On 80, you have to declare dividend and auto provide for the what are the contribution required for the Karnataka Cooperative Federation and Urban Bank Federation. What are the contribution? 2 and 1% you have to provide in the accounts. Then you have to calculate what is the eligible dividend. Friends, this is the This is the guidelines only for declaring dividend, not for method of accounting. But there is on 19 June 2020, there is a circular issued by the Cooperative Department, Cooperative Audit Department issued a circular to all the auditors of these cooperative societies and cooperative bank, especially DCC Bank. They said that you are making a lot of profit by introducing accrued interest, showing accrued interest as the income, and you are declaring dividend, or you are showing a higher profit. Therefore, you should not do. This is a circular issued by the issued by the Department of Cooperative on 19 June 2020. He says that DCC Bank especially should not consider accrued interest for the purpose of recognition income as on 31st March 2020. You have to account only receipt income. If you do that, you are violating section 145. Therefore, I want to tell you this provision of Rule 22 and section 57 of the Karnataka Cooperative Act applicable only when you are declaring dividend, not for income tax purpose. Income tax purpose, section 145 is the main section. He says you have to mandate you to account your income on a accrual basis. Therefore, providing an accrued interest on the performing assets, good asset, standard asset as accrued interest, definitely you are following the section 145. This notification issued by the letter issued by the Department of Cooperative Societies is not the thing. Suppose you follow not providing interest, then you are violating section 145. Any of the cooperative society is not recognized the accrued interest which is due as on 31st March 2020, and tax auditor or the statutory auditor be careful and qualify. Check that this they are not accrued, even though it is a receivable as per the revenue recognition norms given by the Reserve Bank of India in case of Urban Cooperative Bank or any bank. You can say this accrued interest you can recognize as per the revenue norms prescribed by the Reserve Bank of India, or a cooperative society as per section 145 you should recognize and pay tax on the accrued interest, which is definitely accrued to you, receivable to you. You are entitled to receive it. But for any reasons you are not received later, you can claim as a bad debt. Therefore, claiming this circular issued by Cooperative Department, I will not agree to the extent saying that only the institution which want to declare dividend kindly consider this and reduce accrued interest, unrealized interest, and not paid any contribution to the cooperative federations. You reduce it, balance you can declare dividend. This question will not arise for 31st March 2020. Now, very clearly, Cooperative Department and also the RBI has given to all the urban banks saying that don't declare dividend unless announced by the Reserve Bank of India. That is up to December 2020 will not be any declaration of dividend. This is what I want to share with you. I think a lot of issues on this. I know I'll take up the issues later. Friend, next is the cash deposit. In this cash deposit, Ravindra Kore Kudi, Sir, Ravindra Kore. Hello.
Yes, sir, we can hear you.
Ravindra Kore, I want to take whether I can stop and ask questions now or I complete my presentation. Because if you complete my presentation, maybe some issues are related to some of this cash withdrawal or related to method of accounting. I think I will not do justice if you go on giving lecture without discussing the issues to be given by issues to be raised by the viewers. That's what I thought. If you say that, I will continue the presentation. I want the chairman or the organizer who are there can give me whether I can continue or wait and ask questions in the question box.
Sir, it's up to you, sir. If you want us to...
Sir, so far you said any questions on any of the issues? Sir, you have received any questions so far in your question box?
Yes, sir, and quite a few questions.
You have got a few questions. Who's speaking? Yes, hello, who is there on the line? Hello?
Myself, Manish.
Manish, okay. Sir, now any questions is there? Please put me on that so that I'll take the questions so that I will not carry forward these questions later. You have
Yes.
possibly share me the questions. I will take up the questions.
The questions are available for you also. If you come
Okay,
to the
I'll
right
go to the
bottom
chat
corner,
box.
next to the chat, you see 3 dots. If you click on it, you'll see Q&A.
Sir, so are the credit corporation. There is a question, first question raised by Nandini. Nandini Manjunath, he says, so are the credit corporation society has invested in other cooperative society on which receiving interest. This whether ATP deduction available to this society. This Sovarda is having an associate member as well as the nominal member along with the regional regular members. Same thing is correct. Okay.
Yes, sir.
Only one question received, correct?
Yes, sir.
Only one question.
Q&A the questions actually. In Q&A also you have the questions, sir. Sir,
Okay,
next to the chat there is a 3. If you click on panel option over there,
okay,
it's 3 dots, right?
okay.
If you click
So
on that,
I will answer this question. Hello?
Yeah,
I will
sure.
answer Nandini Manjunath question on this over the credit corp society. He has invested in other cooperative society on which it is receiving the interest. Friends, there is a Savarda whether it is entitled for ATP deduction or not. There is a big question before the income tax appellate tribunal. First decision of Udaya Savarda Credit Corp Society, there where they held that Savarda is not a cooperative society, therefore ATP deduction is not available. Not ATP 1A or ATP 2D. They said ATP deduction is not available. Subsequent decision, which I am going to share with you, then where they said that Savarda is has a credit cooperative society entitled for ATP deduction. Based on this latest decision of the Income Tax Appellate Tribunal and one Karnataka High Court writ petition, in which they said that Savarda is a credit cooperative society entitled for ATP deduction. If you agree with these decisions of the which is beneficial to the credit cooperative society, I feel this over the credit cooperative society keeping any deposits or surplus money in another cooperative society and receiving interest entitled for ATP 2A 1 deduction or ATP 2D deduction, whichever is you can claim. I feel you can claim under ATP 2A itself as a credit cooperative society. You are entitled for 2 deduction, or you are keeping in a different reason ATP 2D. I am going to discuss the case laws of all what I quoted in the early subsequent slides. I will share with you all these views on this. Nandini.
Shall I read the
Yes, please.
TCS levied on receipt basis. Can we show TCS in invoice itself? Otherwise, we require to pass debit note. More than 1,000 entries can be recommended by government
No,
officials.
Sir, this is the provision introduced in 1st October 2020. Whatever the already invoice raised in the earlier, I told you, this is based on the collection. This TCS triggers when it is, you have to collect on the collection, you have to pay TCS. Therefore, if you all the invoice raised in the earlier period, for which you are receiving now, then for which you cannot raise invoice because already you raised the invoice. For that purpose, this circular, which I quoted 29 September 2020, it says you have to raise a debit note. In case of invoices you are going to raise now, and you definitely hope that you are going to raise an invoice and going to collect more than 50 lakhs in a year, then you have to include in your invoice as a line item, cost of invoice, transportation, freight charges, CGST, IGST, all the whatever the item on which you say TCS under 206C 1H 0.075% up to 31st March 2021. After that, you have to raise 0.1%. You should show as a line item in the invoice itself. Provided you are very clear, you are going to supply to this person. Suppose you are not clear, but subsequently you come to know that this invoice and collection is more than 50 lakh. For that purpose, you can raise a debit. That was clarified in the circular very clearly on that. Okay. Yes. Any other question?
Yes, sir. Sir, in case of cooperative credit society, who deals only in cash can satisfy this condition?
Sir, tell me.
Sir, in case of cooperative credit society, who deals
Hello?
only in cash can satisfy this condition? I don't know which condition.
Hello,
Yeah, you can hear me now, sir.
sir.
Can you hear me, sir?
I'm hearing now. You tell me.
Yeah. So there's another question here. They're saying in case of cooperative credit society,
Ah,
should deals only who deals only in cash can satisfy this condition? I don't know which condition they're asking about. I'll go to next question, sir.
ah,
As per the circular number 19,
ah,
2015,
ah,
194A 3V
ah, ah,
35 of the Income Tax Act,
ah.
exemption given to deduction of tax from interest paid by cooperative society to another cooperative society shall
Hmm.
continue to apply the cooperative bank, and therefore a cooperative bank shall not be required to deduct tax from the payment of the interest on time deposit to a depositor.
Hmm.
Being a cooperative society, but now the turnover criteria is brought in section 194(3)(5), and if turnover of cooperative bank is in excess of 50 crores, whether TDS is to be done on society deposit.
No, sir. I want to tell you very clearly. The cooperative bank paying interest to cooperative society, turnover is not the criteria. Here is a cooperative society, is a receiving society. It is not a paying society. What I told turnover of 50 crores is only when you are a deductor. When you are paying interest to your members, you have to deduct tax source. In this case, given example, is a cooperative bank paying interest to cooperative society. Here is a society receiving the amount. Therefore, turnover of a cooperative bank is no relevance to me. Turnover may be 100 crores, 1000 crores, no relevance. I am receiving, as per the circular given earlier, clarified and to the circular dated 27 November 2015, very clear, cooperative bank paying interest to cooperative society, still that exemption will continue. You are not required to deduct tax source. Even the amendment in 184A, there is only in case of deductor is a cooperative society where cooperative turnover is more than 50 crores, this provision is applicable, not cooperative society as a recipient. Cooperative society as a recipient, this provision is not. Clear, sir? Okay, next.
Okay, sir. Next question is,
Ah.
is it possible for department to conclude and assess a cooperative society as AOP and determine tax liability only on violation of 15% threshold on nominal members?
Sir, I told you regarding rate of tax, I told earlier, even though under person definition under the Income Tax Act, suit 231, they said that the cooperative society is not included, but as per the decision which is followed by everybody is called AOP. Only a limited purpose of calculating status under the income tax called AOP, Association of Persons. Then my tax liability is already defined in a separate paragraph of the Income Tax Act. There is a Finance Act 2020 or any other act. It gives a separate paragraph for me as a cooperative society registered under the Cooperative Society Act of the central or state. I am liable to pay tax up to 10,000, 10%, 10 to 20 is 20%, more than 20, 30%. But if you are opting from 1st April 2020 at the special rate of 22%, subject to conditions. But your question is, once I am a cooperative society, only purpose of determining status under the income tax AOP, tax liability always written by the link to the table or the paragraph given on the rate of taxes defined under the Finance Act of relevant Finance Act. There is no violation. There is a, you have to determine even whether you violate threshold limit of nominal or associate member, or your all nominal members are the members, then also you are not violating there is a no violation as per the Karnataka, as per the Income Tax Act. Therefore, in my opinion, cooperative society entitled for what are the rate prescribed under the table, not under 15% rate. That is violation will not be this subject to any other rate. Rate will be same. Maybe you are not entitled for ATP. You can take citizen cooperative decision. They say that you are having a nominal member, you are not supposed to have a nominal member as per the multi-purpose aid society of Andhra Pradesh. But in our law, As per Karnataka Society Act, it says that you can have a nominal member as well as associate member. There may be rule says that you can have only 50% of the regular member as the nominal or some percentage for associate member. As per my opinion, is applicable only to the housing society. It is not applicable to a credit cooperative society. That is my view. Anyhow, is violation of any cooperative society act. Income tax will not say anything. Income tax say if you are a cooperative society as defined under the Income Tax Act, then you are liable to pay rate of tax as envisaged in the paragraph described in the Finance Act, not 15% as not the violation is no relevance to that. That is what I want to clarify. Next is, sir, these questions I'll take later because this I'm having a cash credit 216 SS. All these things I'll take after these questions are over. Next, sir.
Yes, sir. Yes, sir. Yes, sir. Please continue, sir.
Then next, what is 216 is the next question? What is it? When a member draws, what is a member draws a cash from his account in the cooperative which is providing credit base to its member, is a cooperative society required to deduct tax source under 194N. Sir, I want to tell you, under 194 says every person being cooperative bank, banking company, post office, only these three people, when he paying interest, when he paying a amount to other persons, he is applicable. When a cooperative society, credit cooperative society is not covered under 194N, being a person. Person definition includes only banking company, cooperative bank and post office. These three entities and paying interest, when you paying amount to any person more than the threshold limit of 1 crore or 20 lakh, then this 194N is applicable, not to others. Credit cooperative society is when you're paying a withdrawing facilities of more than amount threshold limit, whatever the amount, then 194N is not applicable, but penalty provision under section 216N or 216N or 216N ST is applicable, not under this provision. You have to see the other provisions, not under 194N. I'll take a session later. Anything is there?
Sir, there are a lot of questions. I think we'll continue class. Sorry, continue the session, and we'll.
No, I'll complete, sir. Somebody asked.
There are about 19 questions.
26 QA. Madam, Purnima has raised a question. This 26 QA in reference to section 206A, where to upload? Madam, very clearly prescribed like income tax return. What you are filing 26Q, 26Q of the same method. It is prescribed on the rules where you have to upload, which format. All these things prescribed in the rule. I mentioned in my PowerPoint presentation, Rule 37 AC, ACA. It gives the format and also due date is prescribed. Therefore, you have to follow the prescribed rules. 26Q form, due date is prescribed on the rule. Due date is first quarter by 31st July, second quarter by 31st October, third quarter by January, fourth quarter by 30th June. This is the facilities. Regarding technical aspects of utility, all these things, don't ask you, madam, that I am not an expert in that particular field. I can tell only the, yes, I think it's over, correct? Sir, any other questions is there, or I shall proceed the next?
So there are a lot of questions.
There is a lot of questions. I am not seeing any questions here. The
It's come to here in the Q&A. You can see.
What is it?
But better we complete your session, then we'll take. Otherwise, it will take a longer time.
Okay, you will preserve all the questions so that I'll answer later. Okay?
Yes, sir. Sure, sir.
You will preserve all the questions. We'll see that.
Yes,
so
sure.
Next is we'll go to the next slide on the cash deposits in a demonetization period. Friends, a lot of cooperative societies received the cash during demonetization period, that is from 8th November 2016. They received a lot of deposits from the member. It means member came to his cooperative society, deposit to his account cash, any amount deposited, because there is no clearance about who have to receive and other things, nobody. But what our Prime Minister expected was only nationalized bank or the banks which are entitled to receive this amount. But because not clear, there is no restriction for first 4 or 5 days of demonetization period, 8th November to 12th November or 11th November, lot of cooperatives collected in crores. Collected in means that the members have came to cooperative society and deposited. Now, this deposit during demonetization period of 500 and 1000 rupees note, deposit to remember whether is liable to be as a cash credit. This is a question. Already assessments are completed. In the assessment is 17-18 crores together. Demand is raised on all of lot of cooperative society. I know one cooperative society, the demand raises in crores. If you insist for the payment, I think cooperative society has to close because there is no share capital or no reserves surplus pay such amount. But also one tragedy is here, person who is deposited subsequently withdraw that amount or is asked to close the loan account, something like that. Already transaction is closed. Now the cooperative society, if we ask for cooperative society, they have to pay from their packet. I think it is possible. Now argument for this purpose is, I want to tell you, cash credit arises. Section 68 is applicable only related to my cash. In this case, the member came to my society, deposited cash in this my account, and I collected all the cash deposited by the other members. Then it became my cash. I deposited to my nationalized bank. Therefore, this cash is not belongs to me. Cash is belongs to my members. Only at the time of assessment, you say that how you received this so much cash. You can say I received from A, B, C, D members. This is the address. This is the PAN number available. What is the amount received? You give the details to the assessing officer. Then assessing officer has to catch hold of that member. How you got all the sources? You have to ask that person. Or not to the cooperative society. But lot of assessing officer, almost all assessing officer say that this cash belongs to you. You are liable to pay tax under Section 68 at a higher rate of 60%. I think is very unfortunate. Now is available only to the appeal stage. A lot of appeals we have filed, in which we want to take a plea before the appellate authority saying that, sir, we are a credit cooperative society. We are required to collect deposits from the members, cash from the members. He come to his bank and they say this is SB account, please credit to SB account 10 lakhs. I will accept. But during that period, we don't have any restriction. Therefore, I accepted and I deposit to bank. I'll give the details of the person who was deposited. I'll give the name and address of all the depositors. Most of the cooperatives have given the details. Even after giving details also, they have added under 68 and liable to tax at a higher rate. My view is, it is not the cash credit of my cooperative society. It is a member. If you want to catch out of that member, I'll give the address. I'll give the full address, what is available in my records. And the PAN number, if it is available, I'll give the full amount. Catch out of that member. Then only 68 is applicable to the member, not to the credit cooperative society. Therefore, you have to take a plea before the appellate authority, saying that this cash is received from XYZ members. I deposit to the bank on so and so date. You are in a position to give the who has deposited and where you are deposited. You give the link, and it is tallies. I think assessing officer cannot add under 68 to your account. He can add only in the hands of the members. Now, this is what the plea you have to take. These are all the definitions: cash deposit and unexplained money. Therefore, if it is any other unexplained money, you know the new provision after 19th December 2016, it says very clearly, section 115 BBE, rate of tax, any income envisaged under 68, 69 or 69A or 69B, C and D, if income is coming under this group, you have to pay tax at the rate of 60%. You have to pay tax at 60%. That is what I want to enlarge here. Next is restriction on accepting or receiving cash. Somebody asked question whether 194N is applicable to a credit cooperative society. No, it is not applicable because it is not a person covered under 194N. It is a credit cooperative society giving interest, giving income, giving withdrawal facilities and cash in cash. You have to see accepting or receiving, then 216 SS is applicable. You know, if you are receiving a cash after 1st April 1984, you receive cash more than 20,000 in hard cash, then you are liable for penalty equal to the amount received in cash. That is a 216 SS. You know, 216 ST from 1st April 2017, it says a recipient, person who receiving from any person or for any occasion or any other events they have envisaged in ST. It says that if you receiving amount is more than 2 lakhs in a year, recipient has to pay penalty equal to the amount received in cash. In case of person who receiving the amount, have to pay penalty. Take for example, give an example, somebody has posed a question, 194N is applicable. Friends, I want to tell you, person who want to draw cash from your cooperative society, it is more than 2 lakhs in cash. I think 216 ST you can invoke and department can say that you have received from this cooperative society more than 2 lakhs, you are liable for penalty under 269 ST relevant provisions. 216 SU, you know, this is the new provision. It says that October 2019, you have to make a provision for a digital payment in your organization where your turnover is more than 5 crores. You have to have provision that any customer want to pay online payment, you should have a facilities to pay, like a payment schedule, that payment, digital payment equipment, you should have. That's what the 260 SU. You know, 269 is a repayment of loan. You should not be in cash. It should always in account pay check. There also limit is 20,000. This is also very strict provisions. Friends, all these provisions are applicable to cooperative society. Therefore, be clear and very, very strict these provisions. And if you violate, you are liable for consequences, very severe consequences of penalty. This I discussed very clearly here. I don't know because already another 15 minutes time is there. I want to go to the press related to COVID-19. Friends, there is a lot of circular issued after COVID announcement on 24th March 2020. There is a lot of circular issued. That is only I have taken 4 circulars here to explain to you what are these circulars. The first circular relating to 4th April 2020. It says that in the circular it says that any person applied for a loan reduction in the earlier year, or you have given a 15G, 15H to any deductor, if you have given, that 15G, 15H or lower reduction will continue up to 30th June. That is the circular issue. It means earlier financial year 1920, you have given a lower reduction certificate or you have given a 15G, 15H up to 30th June, the same certificate holds good. You have to continue at the same exemption or same rate up to 30th June. That is the first circular. After 13th May 2020 is a very interesting circular which says that your due date for filing return is extended to November, and also the quarterly return filing also is extended up to July. That was the due date specified. After that, they also the same circular they clarified TDS related to all the TDS under Chapter 17B. Whatever the rate, you have to give 24% discount. I call it as a discount. You have to deduct 70%. If the rate is 10%, you have to deduct 7.5% from 14th May 2020 to 31st March 2021. It means whatever the TDS you are liable to deduct after 14th May up to 31st March 2021, during this period, whether you are paid or credited to the deductee's account, then you have to deduct at a normal rate, give 20% discount. But this discount is not available to rate prescribed under 184N. Cash withdrawal discount is not available. Salary, obviously, it is not, because salary is calculated in average rate of tax, is not available. And you are not provided a PAN number. Then under 206 AA, you have to deduct at 20%. That also 20% continues. There is no reduction in that. But all other sections, including TCS under 206 1H, is discounted 24%. You have to pay 74% of the normal rate prescribed in the relevant section or the second schedule to the Finance Act. 24th June related to extending the due date for filing the return of for the year ending 31st March 2019. You know, 31st March 2019, any revised return you can file before 31st March 2020. They said it is extended to July. Now it is extended to November again. That is also, it means assessment year 1920 return, if you want to file a revised return, you can file before 30th November. Anyhow, normal return for 31st March 2020 also extended to 30th November. These are the things I wanted to explain to you. Now is, I will come to the case class, then I will take the, friends, before going to the case class, I want to give you some advice to all my youngsters who are viewing this program. Friends, any issue before you, whether it is related to any expenditure claiming as a reduction or any issue related to TDS, first you concentrate on a common sense. First you apply your common sense whether this expenses is allowable. This is an issue before you. You have to think whether the expenses is on a common sense basis is allowable. Whether expenses is related to this business or expenses is connected to business, then you are entitled for deduction. That is what you have to apply your common sense. First you apply your common sense. Then you have come to the income tax law. That's called basic law. You see any other provisions of the income tax act bar from claiming deduction, or there is any restriction under any provisions, then you have to go to the basic law. Then you have to go to the case law. Any case law which is the facts of your associate gives any clue from any case law saying that whether entitled for deduction or whether entitled for exemption, you go to the case law. What we do usually is you go to case law directly. You say, as per the case law so and so, you are entitled for exemption or entitled for deduction. That is not a correct approach. Please, friends, first you apply your common sense, then apply basic law, then you go to case law. If you apply this format, I think you are one of the best consultant. You can advise all our clients on all the issues. This is what they advise to all the youngsters. Now I'll come to the case laws. Now I'll come to the case laws. Friends, first case law is which I want to share with you is the Citizen Cooperative Society versus ACAD 397 ITR dated 8th August. This is a Supreme Court decision, 8th August 2017. After this case law, all the assessing officer friends on the other side started bombarding saying that all cooperative society are not entitled for ATP reduction because you are having a nominal members, associate members, you have a regular member, therefore you have a concept of maturity is not existing, therefore you are not entitled. That is the view of the Citizen Cooperative Society, because Citizen Cooperative Society decision based on the Andhra Pradesh Multi-Aided Cooperative Society Act. But our Karnataka Cooperative Society Act is very clearly says that I discussed earlier while discussing the concept. He said member means any member who joined the cooperative at the time of registration or joined subsequently as a member, including nominal as well as associate member. It means any member as per the bylaws of the cooperative society or as per the act of the Karnataka Cooperative Society, he is a member. It means his name to be entered in the register of members, he is a member, whether nominal or regular. You can go to the Mumbai High Court decision where they said very clearly, member means any member whose name is entered in the register of members. He is a member. Therefore, this Citizen Cooperative Society, with a great respect to the Supreme Court decision, rendered in the context of Andhra Pradesh High Court, Andhra Pradesh Karnataka, Andhra Pradesh Society Act. There is a Multi-Aided Cooperative Society, therefore it is not taken. I think somebody has raised a question on this, saying that, sir, I am having a nominal member associated more than the regular, 15% more than the regular member. Mostly based on this reason, I am not entitled for ATP. Friends, you have to argue before the authorities. Citizen Cooperative Society is not applicable. Therefore, for us, Karnataka Cooperative Society Act applicable. As per the Karnataka Cooperative Society Act, nominal and associate member is allowed as a member. Therefore, I am entitled for thing. You have to quote the Jolagan District Central Cooperative Bank decision of the Mumbai High Court, where they said who is a member. Member means whose name is entered in the register of members. Earlier, member definition given by the CBDT was member who is entitled to vote or who is entitled to share the surplus of the cooperative is a member. Now that was overruled by the Mumbai High Court in the cert petition, Jolagan District Central Cooperative Bank, where they said member means whose name is entered in the register of member is a member. He is entitled for this cooperative is entitled for all the benefit envisaged under the Income Tax Act. Therefore, Citizen Cooperative Society had to distinguish saying that this is not applicable to society registered under the Karnataka Cooperative Act. That is the first duty of all our representatives who was going for the authorities. You have to say this I am entitled for deduction. Next is Tumkur Merchant Sovarda Credit Cooperative Society. Friends, this is a decision for the Sovarda Credit Cooperative Society. The issue before the Cooperative Society was whether Tumkur Merchant Sovarda Cooperative Society have a surplus funds which are not required immediately for the members. They deposited parked in a nationalized bank. They parked in a nationalized bank like Syndicate Bank, Canara Bank. They got a substantial interest. during that year, and they claimed a deduction under ATP 2A1 itself. They claimed under 2A itself, saying that this is the amount received for the credit facility members. I provided facility, but I got surplus fund. That fund I kept in my bank, and this is Tumkur Merchant Savarda was discussed in the Bangalore, Karnataka High Court Bangalore bench, where they said that very clearly. Honor says that whenever you receive the interest on a surplus fund keeping in a bank account, it is also providing credit facilities coming under the 2A itself. You are entitled for deduction under 2A itself, not under 2D. You are entitled under 2A itself. 2D means interest in the cooperative society, not under that definition. You are entitled under 2A itself when you are keeping short-term funds in any nationalized bank. Their word used called short-term. The High Court decision says short-term. What is the meaning of short-term? Income tax people started arguing. Saying the short-term means it is less than 12 months. Some officers said no, less than 3 months. Like the difference of argument, saying short-term word used, therefore it will be less than 12 months. Some officers liberally say up to 12 months interest received, you are entitled for deduction under ATP 2A. Somebody no, 3 months. Somebody draw 6 months. But this is in the decision they say any surplus fund keep. They use short term. Short term means suppose you keep for 3 years is also short term. Because whenever you need, you will withdraw and pay to the members. Any loan asks, any advances or members deposit asks, you have to refund it. Therefore, it is entitled for exemption. This is Tumkur Merchant Savarda Credit Court Society given by the Karnataka High Court in the Bangalore branch. Next is Udaya Savarda Credit Court Society. On 13th August 2020, it is an income tax appellate tribunal of Bangalore branch. It says Udaya Savarda Credit Court Society is not a cooperative society. The name is Udaya Cooperative. It is wrong. In the decision also they discussed this is not a cooperative society. Then Udaya Savarda is a credit cooperative society, whether entitled or not. The department argues saying that Savarda is not a credit cooperative society, therefore not entitled. Members agreed with the view of the department representative and said that Udaya Savarda is not a cooperative society, therefore not entitled for ATP deduction, not entitled for ATP deduction. This is the first decision in 2018. After that, in sometime in July 2019, this Siddhartha Pattana Savarda Sahakara Nimita versus ITO dated 16th July 2019. This is after 1 year, roughly 11 months. Then there is one decision of Siddhartha Pattana Savarda. It is a very lengthy decision. Discussed all the what is a Savarda, what is a cooperative, why Savarda has come to exam. This is also a cooperative movement that it is a. Then in that decision they said that yes, you are entitled for deduction under ATP. Udaya said no, but same bench on the later this is discussing very lengthy decision. Discuss cooperative society when it come to exit. Savarda when it come to why Savarda, why cooperative society. All cooperative movement, all the committees, NVCs or committee given the opinion on this Savarda, all are listed in this cooperative this decision, and they come to correct conclusion saying that Siddhartha Pattana Savarda, it means all Savarda banks or Savarda Credit Cooperative Society or the Credit Cooperative Society entitled for ATP on 16 July 2019. Friends, after that, Swabhimana Savarda Credit Cooperative Society filed directly writ petition before the Karnataka High Court. In the High Court, happily said that yes, this all Savarda Credit Cooperative Society entitled for ATP deduction. Now the Karnataka High Court decision in our favor, Savarda Credit Cooperative Society are entitled for ATP and you are entitled to claim deduction. But only one decision of Udaya, he said that it is a not entitled. But it is a very short decision, but it is very enlighteningly discussed in Savarda, Siddhartha Pattana Savarda, where that why Savarda is also a cooperative society and entitled. But it is followed or it is over, there is a writ petition on 16 January 2020, they said that Savarda is entitled for ATP deduction because Savarda is a credit cooperative society. The another thing is another 2-3 days discussion I want to do it here, whether this Kuduvaru Vaishya Seva Sahakara Sangha Nimita versus ITO, this is also a tribunal income tax appellate tribunal decision. In this is the Bangalore bench on 16th August 2019, whether interest should be disclosed as the income of others to claim ATP or under business and profession. This is the end of disclosure. Whether you have to disclose other source to claim ATP or under the business norm. Some professionals of the view saying that you want to claim an ATP deduction, you have to show as a credit facility to members means it should be come under business and profession or other sources. But majority use is to come under business. But ATP says any included in the any income included in the gross total income. Never said the which head. They are not said under the head business and profession. Even your income included under the other source also. Why we use entitled for ATP? You can claim ATP deduction, whether under ATP 2A or ATP 2D, you are entitled for deduction. Atam Lakshmi also same under the same thing, whether I claim under other sources or other business, whether entitled for ATP. This is a very interesting discussion. Totogari Cooperative Sales Society, 394 TR, dated 16 June 2017, which is, I'll discuss June 2 and then I'll come to January 2007. Friends, this is a decision of Karnataka Court Dharwad bench, in which they said that when a cooperative society keeping funds with another cooperative bank, if you earn interest, you are not entitled for deduction under ATP 2D. You are not entitled for 2D because 2D anyway says that you have to keep it in another cooperative society. But keeping in a cooperative bank, you are not fulfilled the condition. Therefore, you are not entitled. That is a decision of 16 June 2017. Totogarki Cooperative Sales Society, they said that you are not entitled for ATP 2D deduction for the keeping deposits in a cooperative bank and earning interest. You are not entitled for ATP 2D. Subsequently before that, January 2017, that is a Bengaluru bench decision, 392 ITR, page number 74, same assessee, but it is in Bengaluru bench. They said, yes, you are entitled for deduction. It means one decision of 392 ITR, same assessee, it says you are entitled for ATP 2D deduction for the interest are received from the other cooperative bank. But another decision says no. Other decision was, friends, you take the decision what is convenient, you feel which is correct, you take, but read both the case class and take an appropriate decision on the deduction. Friends, I'll come to the new form 26 I'll glance only 5 minutes because I'm having another 3 minutes. After that, I'll open question if you are interested. Now, new form 26 AS, it is effective from 1 June 2020. In the Finance Act 2020, they amended section 285 BB. This is annual statement, annual information statement. You have to give it in 26A. It says prescribed income authorities can give this details to registered account and a registered in the registered account of the SSE. That is the PAN number. That is called web portal designated account. You can give. It will be 26A's information updated by the Principal Director of Income Tax once in 3 months. Within 30 days from the end of the relevant 3 years, you can upload this information on 26A's, not at the year end. Earlier was only 31st August. Now it is not like every 3 months once it is uploaded, not calendar month. That depends upon the Principal Director instruction. They can upload this information within 3 months. Within a month from the 3 months ended, they have to upload it. It means within 100 days from the date of transaction, it will be uploaded to your account. Under the new format, what were existing earlier, it is continuing except small changes in that. Information 1, 2 and 3 continuing, no change. Tax, that is a tax deducted source of collector's rights was a PAN wise, it is available. Specific financial transaction, SFT, that's whenever you upload SFT 003 A or 3B or 4, that is a cash transaction more than 10 lakh, more than 50 lakhs in case of a current account, that are withdrawal or deposit, that SFT transaction will be notified. And also they are going to specify other transaction like TCS collection, that will be notified under this sales transactions, and implemented payment of taxes other than TCS, TDS and tax collection source, that is advance tax, self-assessment tax, or the regular tax will be uploaded on payment of taxes column, and implemented demand and refund. Friends, kindly note, demand is a original. Now the new, this one is introduced. From here onwards, you get a demand also in the 26 years. Refund earlier you are getting, now demand. Next is information related to pending proceedings. Kindly note, what is the meaning of pending proceedings? Maybe assessment pending, then also you get the information. Appeal pending, whether you get it or not, we have to wait and see. What is the meaning of pending? Means, in my opinion, pending proceeding in before assessing officer, or assessment completed, appeal pending before the CAT appeals, or pending before the tribunal, or pending before the High Court, or pending before the Supreme Court, you have to pending proceedings. These are all proceedings pending under the Income Tax Act. They have to upload. We have to wait and see what they are going to upload or how many years old, that you have to see. And information related to the completed proceedings. It means assessment completed, whatever may be result, demand or refund, but they have to say what are the completed proceedings, which assessment year. Obviously, for assessment year 17-18 is over, they have to upload now. 16-17, I don't know how many years they are going to, whether they are 5 years old, 10 years old, or only 1 year latest one. That you wait and see, completed proceeding. Board has a power to upload all this, given a power. Now I want to discuss this 26 days, how will be substituted. Kindly note in this part A, Aadhaar name is the additional name, which I have blocked in the thing. Date of birth and date of incorporation is a new name. Mobile number and email address you have to give now. Earlier it was not there. This is 4 addition in the part A. And part B, I told you earlier, 1 is repeat, that is a TDS and TCS. 2 is relevant specified transaction was there, it is continuing, they can add anything. Incorporation payment taxes was there, advance tax, self-assessment tax, regular tax will come in this. Now the added is incorporation demand as well as refund. Refund was there, they are now added demand. Then incorporation to pending proceedings, I told you already, all pending proceedings before the any authorities, whether the CAT appeals, whether before the AO or the 154 pending, all these things they have to upload. I don't know what is pending. If they pay, they post all pending proceedings. I don't know how much page it will take. 26 days, part B. And completed proceedings means assessment completed or appeal completed. All completed proceedings. What when it says pending proceedings, this when complete you have to upload. And they have power to include any other information required to be uploaded. Also they add under this. This is what the new form 26 says. I thought it bit you have to share. Now friends, whenever you filing return, first to see 26 years. What is the information in 26 years? That is a basic data for you. Then you go on asking your assessee, what are the books of account, what is this information, why you have drawn cash, or why you deposited cash, where you deposited. As a tax auditor, check all this transaction, specific transaction, see all this whether reflected or accounted in the books of account. If it is related to that relevant year. This is what you have to do. Friends, I thought it, and I want to thank all the viewers of this program and also Bangalore branch of SARC for giving this opportunity to share my views on this. Friends, you can discuss cooperative societies tax issues, cooperative bank tax issues for hours together. But today they are given only 2 hours. Therefore, I have simplified, which are the relevant things only I discuss with you now. If any issues there, we can open for discussion, or you can mail me. I can give the replies later. Friends, is now question open for this question and answer. If any questions I am not answered so far or not given my views so far, kindly open, we will discuss.
Sir, shall I ask?
Yes, sir. Yes, sir. Go ahead. You ask question. Whatever question you ask, go on answering. You ask one question, I'll reply. Then you go for the next question. Please.
Whether section 269SS and section 269T is applicable to credit cooperative societies?
Sir, it is applicable to any person. Any person, not necessarily income tax assessee. If you read section 216SS or 216T, it is applicable to any person. It is not necessarily assessee. Any person, even agriculture, is not liable for income tax. Also, so 216SS is applicable, 216T is applicable. It is applicable to all the persons. Is applicable. There is no exemption for cooperative society. Cooperative society also comply with this provision. Otherwise, liable for all the consequences envisaged under this relevant provision. Is applicable to cooperative society. Next slide.
When a member draws cash from the account in a cooperative society which is providing credit facility to its members, is cooperating society required to deduct TDS 194N? In my view, they are not liable as they are not a cooperative bank. Am I correct? Yes, sir.
This is raised by Sri Rama. Okay, Sri Ram, it is a perfectly correct. You are perfectly correct. Cooperative is not a person or the person defined or mentioned in the 194N. Only the cooperative bank or the nationalized bank or a post office, when they are giving a cash to the any person, if it is more than a threshold limit, then they have to deduct TDS under 194N. This cooperative society paying any amount to the his members, whether cash or check. Cash, when I pay cash more than threshold, also 184 is not attracted. You are perfectly correct. You are 100% correct. Yes, sir.
Quarterly return for Q1, Q2 for year 21 due to 31/3/21, is it not?
Is it, sir? Repeat, please.
Quarterly return for Q1 and Q2 for year 21 due by 31/3/21. Is it not?
No, I'll repeat once again, sir. Quarter 1, quarter ending 30th June. Anyway, September 2019, this started 1st September 2019, therefore I'll start. Quarter ending September, 1st September 2019 to 31st December 2019. There is a first quarter, there is a 4 months quarter. Then you have to upload this return by January. There is a January. Then from January 2020 to March 2020, you have to upload by 30th June. Next, this financial year 2021, first quarter is over, second quarter is over, already due dates are over. You have to upload this. Only the second quarter due date is 31st October. Please upload by 31st October. Third, fourth is there. You have to follow the time schedule to discover into that. This is what the answer to your question. You have any other view? Tell me quarterly return. What is this?
Ratan Kumar, sir. That is Ratan Kumar is asked. Sir, next question is any utility provided for filing form 26 QAA?
I think it's provided, sir. That's what my friend says is already provided. They are providing it, already uploading it. 26 QAA already provided. They are uploading it, but I am not expert on that particular field. So therefore I can. But my friend says or bank says already they are uploading. Already they are uploading.
Sir, limit of rupees 40,000 under section 206A is an annual limit or quarterly limit?
For a year, sir. For a year.
Okay.
Not quarter, per year. Per year you are paying less than 40, then also you have to upload. That's what the meaning. If it is more than 40, you are deducting tax at source under 194A. That is what they want to do. This is very careful. Read 206A. Only it says we are liable to deduct TDS under the any provisions of the Act, you are deducting. Therefore, you are uploading 26Q return. But other than quarterly basis. Once you are not deducting taxes for any reason, maybe less than 40 lakhs, you are not deducting. That case, you have to upload this 26QAA to the department on a quarterly basis, saying that this person is not going to receive more than 40,000 in a financial year. Therefore, I am uploading this information. Same person, if he is continuing next year, you don't upload that return, that person. If any new person added in that particular quarter and he is getting interest less than 40, then upload that person. Every quarter you have to see, already uploaded, ignore. You are not uploaded, you add again. Like that you have to do each quarter.
Is it necessary to satisfy the nominal member threshold and a restriction on having nominal members be less than 15% in order to claim deduction under section 80P2D?
Sir, see, under Karnataka Cooperative Society Act, I want to ask the member who has raised this thing, whether any penalty provision under the Karnataka Cooperative Society, if a number of people exceed 15%, there is no provision, there is no penalty. Therefore, our definition of Karnataka Cooperative Society Act, it says that member who joining the incorporation of a cooperative society or a member who joins later as per bylaws or as per the Act of the Karnataka Cooperative Society Act, and that includes nominal as well as associate member. There they have envisaged nominal, associate member, also members of the cooperative society. They are not restricted in any percentage. They say any member whose name is entered in the list of members is a member, he is not entitled. But under the cooperative society, no, there is a 15% cap on this nominal member. But the cap is applicable only to housing cooperative. That's what my understanding of this thing. They say it is applicable only to housing cooperative, not to the credit cooperative society. That is what.
Okay, sir. Sir, Rule 31 ACA. Form has to be submitted to the Director General of Income Tax Investigation,
Ah,
New Delhi, or person authorized by him. Is any person is authorized in Karnataka, how we have to furnish the return? You said returns has to be uploaded, but we are not able to find any utilities to furnish the return. Is the details has to be furnished in Excel format or PDF format in CD drive, Director General of Income Tax, New Delhi.
sir, actually, in this rule, they prescribe what is the rule, what is the format, and other things they format different. But I am not very clear whether utility is available or not. But some of my friends who are sitting in a bank, Apex Bank, and sitting in a DCC bank, they uploaded the information. I'll check what is the utility. This person who has raised this question, what is the utility, and other things. If you share his PAN number or his mail, I can talk to that people and I can ask, link to that people, they can talk directly to that person. But I am not in a position to give the clarification.
Okay, sir. Sir, please explain about the turnover means for TDS deduction under section 194A.
That the new provision related to what he is asking question is turnover related to this provision of 50 crores. Is it for applicable for the new provision introduced under 194A? It says that these exemptions specified under 184A subclass 3, subclass 5, it is not applicable if the cooperative bank, cooperative society turnover is more than 50 crores, then you have to deduct TDS on the interest paid to members. That is the new provision. What is this turnover? Turnover for the year ending 31st March 2020, if it is more than 50 crores. What is this comprise of turnover? Turnover whether includes only interest, other income credited to profit loss account, or turnover includes repayment of receipt of loan, repayment of loan altogether. What is envisaged in the Karnataka Cooperative Society turnover, working capital, all they calculate all the this receipt of loan, payment of loan, repayment of loan, all they consider as loan. My view is, friends, kindly note, it is only my personal view. Turnover for this purpose is only the what a credit in the profit loss account. It means that what the turnover you determine for the purpose of tax audit under 44AB, tax audit under 44AB, what you are disclosed in the profit loss account, if it is more than a crore, your tax audit is required. Similar way, your turnover in the credited in the profit loss account is more than 50 crores, that is the interest receipt, and the other receipts like a safe deposit locker or the gold appraisal fee, all together it is more than 50 crores. Plus this credit cooperative society dealing in any product. Lot of cooperative society are dealing in selling in agriculture produce or selling in agriculture fertilizers and other things. That turnover also to add. If it is more than 50 crores, this provision is applicable. You have to deduct tax source to the interest paid to members. That is the new provision. This is
Sir, in case of cooperative credit society who deals only in cash, can satisfy this condition 44 AB limit of 5 crore rupees.
Sir, when you receive everything in cash, you are not eligible. You have to more than 1 crore, tax act is compulsory. I told you in this case, where any person who is dealing, that is applicable to assessment year 21-22, is from 1st April 2020. If you are dealing, your receipt is, should cash receipt more than 5% agbar. Total, suppose your receipt is, suppose 5 crores, in that 5% is allowed as a cash receipt. Less than 5%. If it is more than 5%, your turnover of 5 crores is not available. You have to do audit if it is a turnover is exceeds 1 crore. But you want to avail the higher limit of this threshold limit of 5 crores, then you should not do any turnover. Sorry, you should not do any cash transaction more than 5% of the total receipt. Yes, again, 5% of the expenditure also you should not spend more than 5% in cash. If it is less than that, then you are entitled for 5 crores tax audit. Up to 5 crores, no tax audit is required. More than 5 crores, you have to do tax audit. There is no thing. That is, there is no limit of this 5%. Between 1 crore to 5 crores, if you fill these two conditions, 5%, less than 5% is a receipt, less than 5% is a payment, then your tax audit is required only if it is up to more than 1 crore, up to 5 crores, exempted, you are not liable for tax audit. That is only purpose of tax audit under 44, not for any other.
Sir, please clarify whether TDS is applicable.
Sir, if you are dealing only cash, there is no question of 44 rupees applicable once your limit is exceeds 1 crore. That is the reason.
Sir, please clarify whether TDS is applicable in the case of district cooperative union paying interest on deposits to primary cooperative societies who are members whose income exempt under section 80P of the IT Act and who does not have PAN? It is not having the PAN.
No, 1 minute. Not having PAN is no relevance to me now. But any bank, any cooperative bank, DCC Bank is a cooperative bank. Any cooperative bank paying interest to any primary cooperative society or any other cooperative society which is registered in the Karnataka Cooperative Society, any amount you pay interest, it is not liable for tax, it is not liable for TDS, whether it is entitled for ATP, whether entitled for ATP2D, or it is not filing returns, no relevance to me. As a deductor, if you fulfill the conditions specified under the circular dated 27 November 2015, para 47.7, it says very clearly, cooperative bank paying to interest to any cooperative society, TDS is not there. TDS is not there. Therefore, yeah, I feel even today that circular holds good. I feel this is a question raised by any, if we link to Belgaum people, this is a question I received from the Belgaum cooperative societies. A lot of people raised saying that they are deducting taxes source. I expressed very clearly it is not applicable, not required to deduct taxes source. Next slide.
As per amended section 194A, cooperative society having gross receipt of rupees 50 crore is required to deduct tax on interest exceeding rupees 40,000 or 50,000, as the case may be. So, in the case of cooperative society, whether it is required to furnish interest details quarterly.
No, here is once your turnover exceeds 50 crores, there's a question is contrary. Your turnover is more than 50 crores. One, your interest payment to your members is more than 40 or 50, you have to deduct tax source. You are paying to another cooperative society, don't deduct tax source. But in 206A, if you are not deduct tax source for any reason, one of the reasons is you are paying to another cooperative society, you are not deducting as per the circular. Then in 206A, 26QAA, you have to include this person, name, address, PAN number if available. All these in details you have to submit on a quarterly basis and provide to the authorities. They will take a call whether how we have to tackle that issue. Therefore, as facts given by this viewer, there is not required to be any TDS.
Sir, whether 269 FS and 269T applicable to credit cooperative society?
Definitely applicable, sir. Definitely is applicable because any person under the income tax envisage any person includes cooperative society, any person includes agriculturist, any person includes any other person, whether doing business or not doing business. This 269 is applicable to any person. He is not necessarily assessed under the income tax act. Even agriculturally, they're given some exemptions.
Sir, this doubt is arise because as a society is in the line credit or accepting deposit from members only.
Correct, sir. That's what I'm telling this correct. For that, my solution to all credit code society, don't quote anywhere. I want to tell that you are a credit code society. You tell your members, give your current account number, please deposit to this account. Don't accept cash in your counters. You give pay slips, put your seal, give your account number, let them deposit directly to that account. You'll give the details of his account. You credit his account later. Then you route it through bank account. If you deposit directly to any nationalized bank or a bank which is covered by the Banking Regulation Act, this 216SS is not applicable. To avoid 216SS, you have to open a bank account in another nationalized bank, give the bank account to all the members, say that please deposit your amount in this bank account, give the details of your membership number, give the pay slip, I'll give a credit to you. Otherwise, you collect the pay slip signed by the depositor in your counter, but you deposit that pay slips to your banker and give the slips later to him and give a credit to him. It means you don't collect the cash directly by you. Collect the tax on your behalf, on behalf of the depositor by bank and credit to that particular member account and it will be credited to your bank account. Therefore, you are not risky. Then in this case, you can say 269SS is not applicable. 216SS is not applicable.
Sir, will it be deduction allowed for credit cooperative society for disallowed amount, cash or TDS disallowance?
Now, what you want to say is, I am entitled for ATP, I am entitled, I claimed the return of income 10 lakhs ATP, but while doing assessment, he is disallowed under 2 lakhs because of non-deduction of tax of source or anything. Whether I am entitled for ATP 12 lakhs or 10 lakhs. Is it, sir? There is a question on this. In my opinion, once if he is entitled for ATP, he has fulfilled all the condition. He is entitled for whatever disallowance made. You are entitled for deduction. But the assessing officer says, no, you are not entitled for the what I added originally for violation of any law. I will not give ATP deduction. I will restrict my ATP deduction. So, returned deduction claimed by you. That is one of the view. Lot of assessing officer claiming that you are not entitled for ATP deduction on the disallowance. But my view is you are entitled. You can claim this deduction, but only by filing appeal or going for the further appellate.
Sir, can a marketing society engage in provision of credit facilities as well? Claim deduction of interest on investment on deposits, including reserve fund deposits under section ATP 2A or ATP 2D. I think it is related maybe Totgar case or somewhere.
Sir, what I'm telling is some cooperative societies are doing marketing, dealing in agriculture inputs to the agriculturist. They are doing fishing. All together one cooperative society. Then you have to prepare ATP 2A. You have to prepare a separate profit account for profit or loss account for each activity separately. If you fulfill 1 or 2 or 3 or 4 under ATP 2A1, if you fulfill a claim, there is a credit facility to members. You are entitled for the profit from that activity. Marketing activity for agricultural inputs, you are entitled under subclass 3, you are entitled. Like that, you have to prepare your profit and loss account in such a way that you are fit into one of the subclasses specified under ATP 2A, then you can claim. But you give a consolidated balance sheet without giving the details, maybe in marketing activity you have a loss, then you are not entitled. Or you have profit in some other activity, that activity you are entitled. Therefore, you have a multi type of activities where you are doing marketing, agriculture produce, trading in agriculture produce, or a fishing activity. Then you have to prepare activity wise profit and loss account, then fulfill the conditions specified under ATP 2A, then you can. I have done in some cases the department has allowed where one of the credit society is doing credit facilities as well as agriculture input to the thing, and I claim both are allowed because I prepared a separate profit and loss account audit by a chart account saying that this is the profit from this activity, this is the profit from this activity, I am entitled for the deduction. You can claim.
Yes, sir. This question from very active member from Belagavi, BB Chandragi sir is asked. TDS is not to be made under section 194N. That is correct. What about 269 ST and 269T?
No, I am not. Please repeat the question, please.
TDS is not to be made under section 194N.
Yes.
That is the correct. What about 269 ST and 269T?
I told you, these are all independent provision. Sir, 184N is a different provision. You have to deduct tax source if it is a amount withdrawn is more than a crore. But this 216 SS is the limited threshold limit is 20,000. 216 is 20,000. 269T is 2 lakhs. Once you are cash withdrawal or cash is more than 2 lakhs or 20,000, you are liable for 216 SS. There is no exemption. You are liable for TD. Liable for all the consequences envisaged in 269 SS or 269T. This is my view on that.
Sir, whether 44 AD is applicable to cooperative societies?
44 AD, whether is applicable to cooperative, they can declare if a profit is turnover is less than 2 crores and declare 6% or 8%, whether entitled for. 1 minute, sir. Give me 1 minute time. I will go through that and tell you 44 AD. Sir, you have to provide 2 conditions. One is you should be eligible as assessee and you are eligible business to claim under 44 AD presumptive rate of taxes. In case of eligible assessee means individual or HUR or a partnership firm. Cooperative society is not covered. Therefore, you are not coming under this eligible business under 44 AB. You are not eligible assessee. Even though you are doing eligible business, but you are not eligible assessee for the purpose of 44 AD. Therefore, cooperative society will not come under 44 AD provisions. They have to go under normal tax. Yes, sir.
Sir, is that contra for cash withdrawal and deposit considered for receipt and payment?
No, no. Please, sir. What is that?
Is there contra for cash withdrawal and deposit considered for receipt and payment? I don't know whether.
Contra means what is a contra you have passed? What for you have passed contra? Once you pass the entry for withdrawal cash, and what is the this is not on the same bank account. Maybe contra is cash deposit in the cash book. It is not a contra. What I understood from this question is, sir, he is drawing cash from the bank, 10 lakhs, and in the cash book he'll give the saying that receipt from bank so and so, 10 20 lakhs. It is a withdrawal from cash, deposit in the cash book for the payments. Therefore, it is not a contra. You are liable for all the consequences. NS 184 N. But if you having any other view on contra, I don't know what is a contra. If it is any rectification entry you pass, that will not attract under this code. Cash withdrawal means you should check for withdrawal. Then only it is attracted.
Yes, sir. That's all the questions we have answered. It's taken almost 20 minutes.
Thank you.
Jnana Dasoha. Sir, Dasoha is extended Dasoha.
That Dasoha means, I know, Dasoha means you have to give full food.
No,
full meals, full meals. Therefore, again, full meals, full towers use. Only thing is, they extended 20 minutes, you will not get CPE. I know, you get only 2 hours. Our chairman has to say, Dasoha for 2 hours, 20 minutes. But now Dasoha was 2 hours. Anyhow, thank all the viewers for giving this opportunity. And also thank viewers for patient hearing. I thanks for all the viewers who raised the question. I know I enlightened by the questions raised by you. I have a lot of issues which I come to know. Some of the things is fresh for me. I am very grateful to all of you, and also I am grateful to our Bangalore branch and especially our chairman, Mr. Ravindra Kore, for giving this opportunity and share my views on. Thank you very much. Good evening. Thank you very much.
Thank you, sir. Thank you, sir. Dear members, yes, it was an Jnana Dasoha done by, you used to call, sir, his friends used to call Dr. Venkatesh, because we cannot say as a, sir, because his friends, whenever they are talking each other, we are just witnessing Dr. Venkatesh, Dr. Venkatesh. So today is the doctor is given for in Corona pandemic time, all Jnana Dasoha for 69th session of the Bangalore branch. We are continually having the Jnana Dasoha programs. Definitely the cooperative is not an easy task. It is a very difficult task, and the role of chartered accountants here, yes, in the High Court and all, we have filed in the perspective of audit of cooperative, whether chartered accountants only is we are supreme to audit, or department people are audit, or other profession of audit. Yes, when the case of ATPs come, it is should be handled by, and it is in successfully handling by, that is one only, that is chartered accountants like DR Venkatesh sir, and there are many professionals. There all are chartered accountants representing in High Court. Then there will be definitely, if that is will be an evidence for the pending High Court case in the Supreme Court, that will be a clue how the chartered accountants service is numerous in the field of cooperatives. Definitely chartered accountants are helping. And recently last week, Sawada Federation chairman and MD has came. They have already submitted their report to the state of Karnataka government of Karnataka, that sir, we need the audit from only chartered accountants, please don't include it. So that was only my sincere request, that I am receiving few of the complaints already. Few of the JDs are raising complaint on the chartered accountants because the basic balance sheet are not telling. Like that, many they are questioning. I'm not individually, I'm not going it. We have to take extra due core. This is a very good opportunity for the chartered accountants. We can train the organizations, we can guide them. Then only they will think, yes, these people are our guider, chartered accountants. Then only our value will get increased. So, yes, sir. Sir, please unmute, sir. Venkatesh, sir, unmute. Unmute, sir, please. Yes, sir.
Sir, I want to add to whatever you said, especially the persons who are auditing the cooperative societies. I request all of you be careful. Read all the circulars issued by cooperative societies. and read the Karnataka Cooperative Society Act and relevant rules. While certifying the account, be careful of all the transactions. And if you are very careful, don't bother about the audit of cooperative joint director. Don't worry about that. But you should be very sincere to your work. If you are sincere, I think nobody can shake you. Therefore, I want to request all your professional friends, please do the audit very, very carefully and very, very strictly follow all the guidelines, and then you will be our friends. I want to tell you, when I was a president in 98-99, I made a representation to the government of Karnataka to take audit of all cooperatives to be auditor, amend section 63. Then Siddaramaiah has supported my reviews. Then amendment came. Therefore, now they are given a leverage or they are given a privilege for all of us to do audit by cooperatives, some cooperative banks, DCC bank, all by a chartered accountant. Therefore, please maintain that and see that you give a fruitful value addition to all the banks where you are appointed as a appointed as auditor. Please do a very sincere job so that our profession will be bring to a higher position. And our chairman has already explained, maintain our professional ethics and professional integrity, ethics and everything very, very intact. Nobody should shake us on any other. Therefore, I want to take this as an opportunity. I want to share that everybody please maintain this thing and don't bother about any auditors. Please, you very clear about that. Follow. I told the circular issued by the letter issued by the cooperative department. I told wrong. Director of cooperative, how you say wrong? First you read the Income Tax Act. Income Tax Act overrides the other provisions. Then he told yes, we should. I am not agreeing with your circular. Don't issue circular to the auditor saying that please don't recognize the revenue. I told on face of it that maybe he has felt a little hot. I am not bothered, but I told this is the V1. Therefore, be strong. Be strong. Don't worry about this. You be clear. Then there will not be any issues. And Ravindra Kore told I am a doctor. Friends, I tell you, by birth I am a doctor, but by education I am not a doctor. By birth I am a doctor and not by education. This is what I want to say. Thank to all of you. Thank you very much.
Sir, it was same like Dara Bendre. The Dara Bendre, people have contacted, he told, they wanted to give doctorate to him. He told in my name itself, DR Ramachandra Bendre is there. So it is not required any PhD from university like doctorate. So you are doctorate for the tonic giving to our all professionals in the knowledge sharing. That is the Jnana Dasoha. Yes, sir. On behalf of nearly about 400 viewers who have actively participated today's sessions, and they have taken true and very good full meals Jnana Dasoha today. So on behalf of all the viewers and the managing committee members of Bangalore branch, and bottom of my heart, I am very much thank you, sir, for taking the sessions in the branch.
I want to tell Divya, she was earlier in car. Suddenly now she is come. I want to ask, where are you now?
Sir, right now I am in office, sir.
Then very nice. Earlier you are sitting in car.
I had gone for a client meeting.
Okay.
I came late to reach office. Sir.
Okay. Go ahead. Thank you, madam. Thank you.
Sir, Divya has a choice, but as a chairman, I am stick on to chair. I have to sit.
Good.
Nice, sir. Yes, viewers, and I thank all the viewers for the participating today's session. Tomorrow, I told very important session: practical and commercial issues and challenges for purchase of machinery is under the aegis of Committee for Members in Industry and Business. The two Central Council members are being taken part of tomorrow's session. So, in few of minutes, we are sending the link. With that note, I thank Venkatesh sir and all the viewers. Now I request CA Divya to render the formal vote of thanks for the today's speaker and all the viewers. Over to Divya.
Thank you, Chairman. On behalf of Bangalore Branch Managing Committee, I take this formal opportunity to propose a vote of thanks for this webinar. First of all, it's a big thank to DR Venkatesh sir for sparing his valuable time and giving an excellent presentation. Very knowledgeable presentation, sir. Thank you very much, sir, once again. And I also thank all the participants for your active participation, and we seek your support the same way for our future programs. Thank you.
Thank you. Thank you very much.
Thank you, sir. Thank you.
Thank you.